following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Good morning, everybody. Welcome to NinjaTrader Live. My name is Jim Cagnina. It is August 20th, 2024. Appreciate everybody being here today. Joining me live from Long Island, New York, my partner, the incomparable Tom Schneider, CMT. Tom, good morning.
Good morning, Jim. How you doing?
Everything good. I can't complain, to be honest with you. Can't complain. Everything's good. Weather's good. Kids are good. Parents are good. How about you?
Yeah, about the same. I mean, like I said, I can't complain. Nobody'd listen anyway. So that's, Tuesdays, it feels like a lot of work gets done on Tuesdays, right? And, you just raring to go a little bit more than Monday. Monday, yeah, you deal with what happened over the weekend. You go through emails, a little bit of a longer lead time to start the day. I think we hit the ground running Tuesday.
Yeah, my calendar is like totally full today.
Oh,
We got an interview with a new guest possibly later on today, Trader Tammy. That'll be fun.
That's right.
So anyway, let's take a look at what we're up against today. Not a lot of official economic news out the gate today.
No. So I've got 3 items, right? Although there's a little more, we could talk about that. Treasury buyback announcement at 11.
Yeah.
We've got the Atlanta Fed President Bostic speaking. I think also Michael Barr is speaking later as well. And then API weekly oil stocks at 4:30, kind of a regular meeting or a report that comes out at 4:30 for the oil market. Otherwise, it's just kind of monitoring the news, seeing what happens, and watching the charts.
Yeah. Well, 3 items. It's like if you go shopping at Costco or if you go shopping at Home Depot, you have 3 items on your list. It turns into 30 items. So what the analogy here is what unplanned news possibly are we up against? And there will be some probably.
Yeah. And we have Bostic on the schedule, but any one of the governors and bank presidents could speak today that we just didn't see their schedule. So you might see things come out ahead of their travels to Wyoming.
Yeah, for sure. Well, let's take a look at some of the charts then, see what's going on. I'm going to pull up my E-mini S&P chart. Bear with me a second. Last print was, I think, 5630. Daily candle chart up here right now, RSI at the bottom. And, again, a kind of a pause at the top of this candle, Tom. I think we saw that the last couple of sessions, maybe even. And then we know what happens after that. So we're only 1.5% off of this peak close that we had back here on July 16th.
Yeah, and yesterday was kind of looking like today, right? I mean, a little bit of a drawback or pullback at the beginning of the day, but as we sometimes see, a lot of times we see day after options expiration, you do get a directional candle by the end of the day, and that's what happened yesterday. We just saw a consistent rise, and we closed near the top of the candle, which to me is bullish, right? So you've got 9, what is it? Is it 9 consecutive candles or 8 consecutive candles that are green bodies? We'll see what happens if we make a 9th one today. But you're getting awfully close to that 87.5% retracement, which to me is like, well, you might as well get back 100% retraced if we get above that.
Yeah. And so, Tom, what I did too, though, this morning, and I'll show this, if I can. I changed my data again. You can't fight City Hall, Tom. So I changed my market data to do not merge.
Gotcha.
So now I think we might all be in sync, right? I finally gave up. We're going to do that, not merge. Remember, folks, you have a few options. You could merge, back adjust. You could merge, non-back adjust also. So I'm just going to do, no, do not merge on those monthly contracts. You'll probably see some gaps, which makes sense. So just don't panic.
Wait, before you go there, though, let's go back.
Yeah. Okay. Did I do something wrong?
Instead of do not merge, let's do merge non-back adjusted.
What does that do?
So that's going to merge the contracts, but it'll just report the actual prices they traded.
Okay.
Do,
All right,
do not merge.
That's the setting you have, right?
Right. Do not merge would be the actual contract, and that's it. So if you do not merge, you've got September E-mini,
Oh,
and that's
gotcha.
all you have.
I see. Okay, so I hit apply
Right.
and okay. Now, do I have to log out and log back in, you think, for
No, I
changes
think
to
you
take?
just need to re-request the history. When you go to a new chart, that'll happen anyway, right?
Oh, so and then you just go here, reload all
If
historical data on this chart.
exactly.
Wow, you're a genius.
I don't know about that, but
Whoa.
that's how that works.
Where are we at here? All right, daily chart. Still though, we're tracking, it's a pause right now, right? Not a lot of economic news today. That probably not a lot of, hopefully not a lot of unplanned news. Unplanned news is usually bad. But there's some events going on in Chicago, obviously, but I don't know if that's going to really move the needle for the market's place per se. So, Tom, we're above my rectangle here. Again, I feel like I have to delete it, but I'm gonna extend it instead just to see if it becomes support later on. Just gonna line it up with that target wick, which we already achieved that target wick. You could see that there on that ellipse. Oopsie, it won't let me get it because it's high. There we go. Let me delete that. So let's keep rolling. I'm open-minded today so far.
Yeah.
Micro Nasdaq. Down a little bit, but not enough. Again, same thing. We have 1, 2, 3, 4, 5, 6, 7, 8 green days in a row. Systematic price moving up on the stock index futures. Same kind of area we broke through here. Target wicks achieved. Now we'll see if this area becomes support or not above that 62.5% retracement.
Yeah, just looking a little weaker than the E-mini S&P just in terms of retracement. It hasn't gotten to that 75% retracement. It's fine. Could play some catch up eventually. It's pulled back a little bit rather than just being flat or a little bit up like the E-mini, but that's all, rounding errors, so to speak, before the institutional folks come in and see what they do. But you see this interesting pattern, right? Big move, 1 or 2 candles of pause, big move, 1 or 2 candles of pause, repeated. So today might be a pause in this uptrend.
Yeah, that's a great observation, right? It's like, all right, we're rallying, and then wait a second, slow down, slow down, slow down. Let's rally again, slow down, rally again. That's been a pattern for sure. We'll see if today follows or not. I don't know, but let's go over to the Dow right now. Dow is again pretty much unchanged, same kind of thing. Although not 8 candles in a row, we have a little bit of a different pattern here, but still kind of systematic price behavior right now, and we're really getting close to that the high close back on the 17th of July.
Yeah, and like the E-mini, right at that 87.5% retraced. Small body candle, bullish overall. I mean, I'm still bullish even though we have this seller's wick. It's not a huge seller's wick, and buyers are keeping this up a little bit. I'd want to wait and again see what's happening at the open at 9:30. But I could see this doesn't have that stutter step pattern that we saw in the NASDAQ, right? This is more of a continuous uptrend with the exception of that pause that you just highlighted. It's been more of a kind of continuous uptrend.
Yeah.
So we might see some follow through there.
Yep, absolutely. I mean, when you think about bias, so you got to talk in terms of, I think there's 2 levels of bias, right? When you look at the chart and you see this kind of pattern, you say, hey, my bias is bullish. right? We've got all these green candles in a row. We bounced off this bottom right here. I'm bullish.
Mhm.
Then when you kind of look at a candle, like right now, pre-market, intraday, you look at this and you're like, all right, there's a pause here. I might be a little open-minded on the open or right after the open. So that's why
Right.
there's a distinction, I think, between those two ideas.
Exactly. Exactly.
Russell 2000. Got some work to do still, but again, pretty similar pattern, although a little bit more, uncertain.
Yeah, looking more like the Nasdaq than the E-mini or the Dow. Fine. I mean, still longer term bullish, but today could be a pause, open-minded, two-way trading, whatever
Yeah.
you want to call it. Um, just think small, could be small volume and small range today.
Yeah, in the big scheme of things, though, I think if we get a close above that 62.5%, above this, what used to be support, which is now resistance, I think then we could get, the horses could get out of the barn and start running.
Yeah, yeah.
So, all right, crude oil. Wow. I mean, this is shocking to me, Tom. This is shocking to me. Let me move this over here a little bit. The anticipation is that OPEC Plus is going to release more inventory. I mean, that's shocking to me. We got to get Tom Clausen back on here. But look at the candle that we formed today.
Yeah, buyers trying to keep this up. Yeah, you mentioned OPEC, and generally they have their meetings at the beginning of the month. So unless something drastic happens, I think, if we hear from OPEC now or OPEC Plus now, then that's a problem, right? They're
Yeah.
panicking, or they're making a drastic change to their policy,
Yeah.
which if we don't hear from them, we still might hear some policy changes at the beginning of September, but you know, in light of that, it seems to me to be geopolitical risk, and as risk seems to be waning a little bit, just be ready that something might move the market we don't anticipate.
Right. Exactly. So, and we see this. I mean, that was a pretty decent sized wick here. This is 72.53. That's a buck 20, buck 25 on the move back up. So I'm sure there's some kind of name for this. I don't know if it's gravestone, shooting star,
Might be a
a
dragonfly. I forget where the dragonfly comes in.
dragonfly.
This is dragonfly would be at the the body at the very top. In fact, it would be a doji. But Mike had called had said, I could see oil getting back to 73, 72.
Yeah.
And that's where we're headed. Even though we have a big buyer's wick today, that's a
Yeah.
probe. That's the market exploring price down there. We might not stay there today. In fact, we're back above what, 72, almost at 73. Are
Yeah.
we above
73.82. Yeah.
Yeah,
73.82.
almost
Yeah.
74. Um, I could see this continuing down. We got lower highs, lower lows. I mean, that's a downtrend. So
Yeah.
uh, I'm bearish, but again, just like you are in the stock market for being bullish overall, cautious. Um, Oil bearish long term, but cautious today.
Yeah. Yeah. For sure. By the way, dragonflies are good. We planted these plants in our backyard specifically to attract the dragonflies
Okay.
because I think they eat like the mosquitoes and other
Oh,
nuisance,
wow.
no CMs, they call these little bugs that you can't see that just bite you.
Oh, yeah.
Yeah, it's like they're an arch villain down here, by the way.
Do you have lantern flies? Do you know about this?
No, what's that?
Oh, they are pretty ugly flies. They look almost like moths, but they're quick. They're an invasive species from China. And now they're here. They came to like New Jersey, and now they're in New York.
Really? They probably just came to check out the Statue of Liberty and never went home.
Yeah, but they are.
Yeah.
They're
Yeah,
no
no, the
good.
dragonflies are good though because and they're cool looking, and some of
Yeah.
them get really big. It's like, wow, this is creative design for whoever designed a dragonfly. But anyway, we're sidetracked here, Tom. Let's go back. Let's go back and check
Let's
out
see.
gold. Gold's up 23. Again, great market to trade. We get huge ranges in gold, big candles in gold. You got to be careful, of course. Remember, risk is a double-edged sword here, so be careful. But I mean, my fib line's no longer any good. We're making new highs again. Uh, this is indomitable.
Yeah, this is really interesting what happened yesterday. Okay, over the weekend, you think yesterday's candle was from Friday to, Sunday night.
Yeah,
So it gapped up on the open, but didn't
yeah,
stay there, right? So
yeah,
traded down, closed down for the day, and now you have this, this reversal that just looks really bullish. The only thing
yeah,
you can't really say anything more about it. I would say that, you have room to go. The RSI isn't overbought. Not that that means, the end all be all, but it still
yeah,
could go a little bit higher before considering overbought. Yeah, this is a very strong market right now.
yeah. It is. It is. It's shockingly strong. My bias is bullish.
Oh yeah. Yeah.
30-year Treasury bonds, again, I'm bullish. Another kind of peak up against. We're walking up along this 8 exponential moving average, Tom, which I find awesome.
Yeah, just support right there, right? How many
Yeah.
how many candles, right? Like,
I mean,
out of the
really,
last
from
9,
3,
8 or
4, 5,
9, there've
6, 7,
been
8. Yeah.
7, yeah, right? So,
Yeah.
moving averages are trending up. You've got higher highs, higher lows. This is probably feeling better about September rate cuts.
Yeah, for sure. For sure. So again, bullish here. Let's go. Let's check out, Tom. I wanted to do the Bitcoin.
Yeah.
I want to do the Bitcoin. This is a monthly contract, folks. This is where you see gaps. Um, Still, we have that kind of wedge you identified yesterday, Tom, and we're breaking out a little bit, but not enough for me to say, not to change my opinion that we're sideways.
Yeah, no, that's a really good point, right? So you've got,
Oops, oops, oops. Sorry. There we go. We're
you
back.
at any given bar you can identify different trends, right? Um, Not always, but when you have some indecision like we've had in Bitcoin, and that wedge is identifying, possible upward pressure, possible downward pressure that will get constrictive. The range is a little different, right? We still have to get out of this range that you've
Yeah,
identified with your hamburger bun. So,
yeah,
what do I still see? I see downward trending moving averages, although the 8 is just about turned up. So
yeah,
maybe we're in a transitional phase where if Bitcoin again picks off these items on a checklist of how to be bullish, cross above this moving average, cross through the hamburger bun, cross through this moving average, take out this previous high, right? All these things, fill the gap. I mean, fill the gap is good. I know we kind of filled it, but not with a close. That gap at the beginning of August. So, to me, that would be a little bit of a victory if we fill that, if we close above the low from, what is it, August 2nd or whatever that gap was, that'll be a
yeah,
victory.
yeah.
Yeah, go to the left one more.
Oh, this guy?
No, 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 no. Let's go to I'm
Oh, this
sorry,
gap
right
here.
there. Yeah, the
Yeah,
close
yeah,
right
yeah,
there.
yeah,
We close above
yeah.
that close. That close. That to
Right.
me is I can feel better about being bullish about Bitcoin.
I'm gonna draw a line there.
All right.
Boom. That's approximately, we can round it up to 63,000 for the Bitcoin, but we're not there yet.
No.
All right. I wanted to try without messing up my chart too much. Let's see if we could do it. The Japanese yen. Daily chart here, Tom. What are you thinking?
Yeah, I mean, looking
Excuse me.
on different levels, looking bullish, right? So on the longer term, from what is that, early or is it early July, mid-July, whatever that big green candle is.
Yeah.
Um, bullish there, bullish in the last 3 days after kind of a pullback. This is kind of classic wave action. So
Yeah.
yeah, I'm bullish both, short term and medium term.
Yeah. So I'm building this like portfolio, this long-term portfolio kind
Yeah.
of strategy on a swing trade. So I just got long the yen. And don't let the green on this fool you guys, because I took a huge hit in heating oil, like a big one.
Oh yeah.
Oh yeah, it was horrible. I was like, oh my God. But then I kicked in, my inner Mark Douglas kicked in. I was like, all right, I gotta let this go. I got to let this go and be stubborn. So I got out of heating oil with it was like 7 grand. So
Oh my
again,
gosh.
real time SIM account. I have SIM account one. So you can have multiple SIM accounts here with your NinjaTrader account, which makes it really easy to do different kind of experimental things. But I did get long the yen because I feel like, um, I waited to see some kind of sideways stabilizing process here, and we did get it. And then when you kind of take a peek out, I mean, as interest rates change, the policies change, the yen might be able to get a bid, and there's a long way to go to on the top here. So that's my thought process on the yen, uh, on the yen here. But in any
And,
event,
and
yeah,
Jim, on this chart, you have that failure where there was consolidation. The 8 failed to hold,
yeah.
but the 21 held pretty nicely, right? Is that the 21?
Yeah.
Yeah, that's
Yes,
the
exactly
21.
right, Tom. That's a great observation here. And this is a daily, folks. Remember that. Boom. Touched up against that 21, and we're good to go. We're bouncing. We're moving up. So I have high hopes. We have a short-term target wick up here too. Remember, this is inverse to inverse to the cash forex, where it's US yen. This is yen US. Target wick 71.03 half right there.
Right. Right.
While we're talking about currencies, Tom, go to the euro. Euro is just really
Oof.
crushing it. This is a really nice breakout of this double top. This rectangle, it's no good anymore. I'm going to get rid of it.
All right,
All the
but
moving
wait,
averages are straight up. Oh, you want me to put it back?
put a horizontal line at the double top if you don't
Horizontal
mind.
line. No, I don't mind at all. So
Yeah,
right here
like right
about
there. Okay.
right there. There we go.
Yeah,
Boom.
like that's good. So now measure that distance to the low.
Oh, I just see where you're getting at.
Yeah.
I see what you're getting at. All right. So from this line to this low, right?
Nope, nope. To
No,
the
no,
to
no,
the
no.
middle, to the low of the chart.
Oh, well, all the way down here?
Yeah.
Oh, you're an animal.
Try that again.
Oops, I did that wrong, Tom. I got to do the line tool.
Yeah, or get an arrow. Do the arrow. I like the arrow as well.
You like the arrows? Well,
Yeah.
okay.
I'll show you
We'll
why.
do the arrow. All right. We'll go the line, right? The double tap down to the bottom. That's the end of June. I'm gonna
Yeah.
click it. Now I know what you're saying. You got to do a double double click it where we broke out and see. And now the arrow's backward, but that's our target, right?
Right. Right. That's an inverted head and shoulders that you just identified. Right. You
What?
see the
I didn't
the
identify it. You
well
identified it. I just drawn lines.
on your chart. You
Yeah.
identified it. Neckline is the horizontal line. You can see the two shoulders. We didn't identify them. We just went right to the measure
Yeah.
of the neckline to the head.
Yeah.
Just shortened it up a bit. But it's what it is the market went down, came back up to the neckline, tried to get a little lower, came back up to the neckline, tried to get lower again, got a little lower than the previous shoulder, but not to the head. And then that neckline is kind of an attractor, right? So now if we go above, notice how it got above the neckline finally, and
Yeah.
that green candle to the right, and it came
Just
back, right?
touched
We
it.
sometimes see that, right? It retraces and then it launched. So that's my target on the euro, even though it seems preposterous. You might pull in some longer term data just to see how it compares to history. Like, have we been there? When were we last there?
Yeah. So this candle here is what you're talking about, though, right? It stayed above the 8 exponential.
Yeah, yeah. No, I mean it was kind of lining up to be pretty bullish.
I love these 8 exponentials. I mean, they're so on a trend or a subtle trend, they work so good.
Can you pull in more data
Yeah.
just to see? Yeah. So we've been
Yeah.
there before, right?
Oh yeah. Oh yeah.
Yeah.
Look at that. We've been there in December 2023. So yeah,
Yeah.
it's a reality. And remember, we have this yin and yang between the two different interest rates between the two different countries. So We'll see.
Yeah, and that's
Once
loosely
the Fed
fitting.
starts cutting, if the
Yeah.
Fed starts cutting, every single meeting, then it's going to be an aggressive price move.
Right. Right.
Anyway, Tom, who's the first to chime into the chat today?
Oh, we have two people. We have Paulie H, first one to chime in to the ninjatrader.com/events chat. Thank you, Paulie. You got a special shout out for being the first one in that chat. And then we have iCal for the YouTube chat. So iCal, you also get a special shout out. Thank you so much for joining the chat. We really appreciate it.
Special shout out ×2 or squared, maybe. iCal, Paulie H,
×2.
thanks for being here.
Yeah.
×2. ×2. Very awesome. All right. Well, Tom, we're like on schedule. So let's go ahead and take a really quick break and get right back into the open.
Awesome.
All right, we are back getting ready for the open. This is NinjaTrader Live. My name is Jim Cagnana, joined with Tom Schneider. Tom, looks like a double bottom, almost triple bottom coming in here.
Yeah. We're getting close to yesterday's close, which, can be supportive. That area we tried to get to twice before, right? In the Asian session and the European session. So,
yeah.
This market just looks, like you said, open-minded, because the longer term trend is bearish, but there just
Bullish.
might be some. Did I said bearish? I meant bullish.
Yep.
You're right.
Yep. You're good. You're good.
It just could be a tired market, right? Or maybe some take profits, or who knows. But point of control right below yesterday's high. We could be seeing that again as well.
Yeah. Yeah. So let's keep moving. Cumulative delta is pretty negative right now. The MACD is pretty negative right now. So I'm not interested in hitting the buy button. I'm not interested.
Can I just say, Jim, I'd be very careful with that cumulative delta right before the open, saying, okay, it's negative, this can go lower.
Yeah.
Just because the institutions can come in and turn that right around if they start buying, right? If they say this is a good place to buy. So just be careful.
Yeah. Yeah. In the volume though, Tom, 118,000. I mean, this is a sleepy Tuesday.
Yeah.
So far. And you could just look at across the board, there's interesting markets that have volume, right? The Euro FX has almost as much as the E-mini S&P, which is not usually the case. Crude oil has more volume than the E-mini S&P. which, you could argue, well, crude oil is more of an international marketplace, so it should have a lot of volume. And then the treasuries they're not doing that, they have some decent volume numbers, but they're relatively speaking not that great. Look at gold, 91,000.
Yeah. Yeah, not even
It's pretty
100.
good.
I think that crude volume, the E-mini versus crude, that volume will change at 9:30, but
Yeah.
pretty
Yeah.
close, right? Within a
Yeah.
1,000 contracts for sure.
Yeah. But while my mouse is on it, I'll click on it anyway. Take a peek. We'll go out of order a little bit here, Tom. But I mean, breakout trade to the upside here, Tom. We had this peak high here approximately 7 o'clock this morning, and now we're breaking out above it. I'm going to put a rectangle there to see if it lasts.
Yeah, we've got a low of 72.54. You got 220 on the average true range, so we could get up to, 74.60, 74.70. That's not too far away.
Yeah. Let me draw a little line there. This is on my radar screen. Let's keep rolling, Tom. Let's just go back to go. We'll go back to the stock index futures. Let's do while we're here, while we're down the bottom part of my market analyzer. Let's take a look at December gold contract right now. Again, just at the high of the day.
Yeah. Yeah, it looks bullish. Point of control right at 25.61. You
Yeah.
saw a lot of support there, a lot of trading it there. But that
Yeah.
could just be a launch pad too. We could see this continue to go. So R2 resistance for a while till recently. So
R2!
just know where R3 is, 25.91.
Yeah, and it's like we had relatively low volume as we clawed our way back up during the European Open and then
Yep.
the London Open. Low volume, we crawled our way back up. But the interesting thing is then all this volume kicked in. Look at the volume profile after that fact, right? After 450, we have all this volume. So what that tells me is these higher price levels are sticky and the market wants to be here. And I'm in full bull mode right now.
Yeah, and that cumulative delta is not yet positive. It's about 1,000 contracts under. I mean, just think if it gets positive, right? If it crosses above zero, we might even see more upside.
Yeah. I agree with that. Let's keep rolling here, Tom.
Yep.
Let's do the micro NASI. Mark says weekend events will weigh on my crude oil opinion as Middle East tensions continue. Yeah, that's the thing. And Mike Burke talks about that a lot, Mark. The this idea that, hey, Friday at the close, don't hold any positions you really don't want. Because they're right. You cannot get out, right? You can't get out of a crude oil position if something really bad happens over the weekend until Sunday night, and then it could be catastrophic. So that's a great point, Mark. Micro NASI now trying to bounce off the top. Buyers are coming in right now in the opening range. We have approximately 226,000 contracts traded so far, low volume. We'll see what happens next. I mean, this is kind of so far the fact that we're anywhere near the Globex close is shocking to me right now.
Yeah, for sure. I mean, follow through possibly, right?
Yeah.
That could be what's happening, though not in the NASDAQ, right? A little bit of pullback, but maybe the institutions want to follow through. Maybe they want to, again, they think this is a great area to be buying, and we'll see. Look at the cumulative delta; it's turning right around. So,
Yeah. But these institutions might be at Martha's Vineyard right now. I mean, 140,000 only. It's like, okay.
yeah, yeah.
It's like, okay, whatever. Um, so Tom, the other thing I did with my fib line, I added the extensions. I think I did it right, right?
Oh,
100, 112.50, 125 on the downside, minus 12.50, minus 25, minus 37.5.
Excellent.
Yeah, what the heck? All right,
But
let's keep rolling here. What's it?
by the way, Hitta says he has those lantern flies in Pennsylvania as well, which makes
Ugh,
sense. They're neighboring to New Jersey, so they're just out here.
wow,
Awful.
they're out there. I don't think I've been. We get a lot of other critters down here.
Yeah.
I'm getting more and more snakes in the. And Mark will appreciate this. Uh, I get a lot. Get a lot more snakes. We maybe not because you're in Northwest Indiana, Mark, but we get a lot more snakes in the actual skimmer basket of the pool in the
Oh.
mornings. Yeah, they're little ones, but still, it's a little startling for us Northerners to see that. Anyway, Russell selling off here, pivots in playtime. And this is you know, not a lot of volume for this peak that we had up here relative to the volume that we see around the point of control. So I think that's kind of maybe an important thing to think about.
Yeah, we could be making a new point of control right around here. Just give it some
Yeah.
time. But then I would want to see that gap filled between the two. I think this market can do it. You've got buyers coming in. Cumulative delta is a little less negative than it was. Now it's positive. So we might see this. I would say the opening range will get back to the point of control. It's very possible.
Yeah, no, I agree. Remember, trend is up still. So we'll keep an eye on it. Do we look at Dow yet?
No.
All right. So really, so folks, what we're doing here is we're kind of looking, if you're new here, we're looking at the 10-minute chart, the intraday chart. We already analyzed the longer term intraday chart. Now we're in the intraday charts, and we're looking for markets that we think might provide us a good setup for a trade idea, which we'll do after the first 30 minutes of the open are over. So FYI, that's why we kind of go through these things at this point on a 10-minute basis, and we're approaching the pivot right here as well, Tom, in the Dow.
Yeah, and this is cumulative delta is negative, with this candle, and it's not just negative, it's the most negative it's been today. On 23,000 contracts, that imbalance is about 500 contracts. So, so what is that, 2%? Maybe a little more than 2%. So it's kind of normal, I think.
Yeah.
But it's looking fairly bearish. I think we can hit the pivot for sure. The question is, where's the next support level? It's about 4,800 as S1. So can we get there? Of course we can. That's only 100 handles, and our average range is over 5. So,
so wait, what's that number again, Tom?
So S1 is at 4,800. Our average,
I see. Yeah.
Our average true range is what, 538. So off the high, that would put us at 4,545 roughly. Ways away from S1.
Wow. It's like off my. It's on my desktop maybe.
Yeah, it's below S2. I mean, it seems like a lot because today is so narrow in the trading range, but it is possible, right? Something happens, adverse news could send this market down. We don't want to think about that necessarily from a 401k. We don't want a 301k. We want a 401k. But if you're bearish on the Dow, that would be great news, right? So the great thing about futures, again, if you're new, you can go both ways. You can go long or short. So there's no good market, bad market, right? It's how you position the market is what's very important.
Yeah, for sure. Let's just take a look at the VIX here. I have this crazy looking, this is no good anymore, crazy looking chart here, Tom. I have a daily mini S&P on panel 1 with my, I can't highlight it now for some reason. Why is that? There we go. With my VWAP, anchored VWAP. And then on panel 2, we have the VIX, and I have a 10-period moving average or 10 daily moving average, simple moving average in that purple line here on the VIX. The VIX is tracking right now 14.92. And then I have the volume underneath it. And you could kind of see, Tom, is volatility kind of tapered off here. The VIX kind of went down. The daily volume candles have been relatively anemic.
Yeah. So, you know, we can put a moving average on that volume, right? But it's going to be skewed a little bit based on that VIX explosion, right? Because
But
the VIX explosion, and there's
I'm
actually a
sorry. I'm
study
going to do
called,
it. I'm going
yeah,
to do it when go ahead, Tom.
yeah, the VIX explosion is, a lot of volume came in, so it kind of skews that average up. Um, Actually, Jim, what I would do is VOLMA. If you
Oh, you
go,
like that one better?
yeah, I kind of do. If you go down
Yeah, I got it.
and then you just have to add it to the same panel,
Right. So that's going to be,
panel two, or three,
uh,
probably.
3. And then we'll do it on each price tick. We'll change the color, Tom. I just don't like that golden.
Goldenrod. Yeah.
Yeah, we'll do something little. We'll do the blue violet again. We'll make it a little thicker and I'll hit apply and okay. There we have it.
So,
Wait, what's our period though? Did we define a period?
oh, I don't think we did.
14. So I have a 10 on the actual. Let's do apples and apples. We'll do 10 again.
Yeah. So 10 is 2 weeks. So it's like, that's like that's a great period. Because eventually that volume from well, it's probably already fallen out. Yeah. The volume from those big moves down are
Yeah.
off, right? So the average is coming down and we're still below that average. So that kind of says to me that maybe this is a little bit of summertime, behavior, right? People on
Yeah.
vacation.
Yeah.
Um,
This is it, man. You got to get the kids to school the day after Labor Day. I mean,
that's right.
you got to get to the beach house.
It's
So,
time. Yeah,
yeah.
summer's running out. Okay, volume's low. That's great. What does it mean for this trend? The trend up, we like to think that trends on volume are important, but I don't necessarily think that it means trends on low volume are unimportant. It just makes them a little bit more susceptible to change, but in the fact that, well, if Europe's on vacation in August and in the US, you might take a week here or a week there in August. Yeah, volume's going to be lower, but it doesn't mean that this move isn't as valid. And you're cross above your anchored VWAP. You're probably crossed above
Yeah.
a bunch of moving averages. So
Yeah. No, and it's always been the case in my experience, most of the time, that when you have these big down days, you usually see huge volume days.
right,
When you see a huge up day, like this candle right here on the 8th, it's a pretty big green candle. And it's the dominant candle on the whole chart. But volume was below the moving average. I mean, we were nowhere near the volume on the big red candles. So, and this is a phenomenon that it's been a lifelong phenomenon for me. So more volume on down days, less volume on up days. How we could use that in our trading, I'm not sure, but think about it, especially as we get into the afternoon. Today we have hardly any 167,000 small volume day. If you look at a trading ladder, though, it's still impressive, right? The trading ladder is going to show. Um, I have the wrong market up here, but let me just change it. By the way, look at that. A 10-year note,
wow,
4,800, 4,000 on the offer. This is an institutional market. So let's kind of switch over. So the Dow, are we on the Dow? No, E-mini S&P, guys. Come on, no one's cooperating with me here. Oh, I see what I did wrong. Okay, ESP, yes, there we go. E-mini S&P. I mean, look at the bids and offers, Tom. It's a low volume day, but the bids and offers are triple digits.
right, right.
So that is a good. This is a liquid marketplace. This is a good market. Get this guy out of the way. Oh, boy, Tom, we have some fantastic people with us today. Some fantastic human beings. I'm gonna add.
Yeah, for sure. We have two places to chat, YouTube and ninjatrader.com/events. And want to thank you for all joining. And we'll just go through who's here. Raleigh is here. Nola Boy is here. Mark R. and Mark Mosqueda. Good morning. Foggy Cape is here. Mom and Dad Keg, special good morning to you. Mario R. from El Paso, Texas, West Texas. Sal and Simo and Hida and Robert W. from Wake Forest, North Carolina. Yovan, Eagle, Ripper 24, Lewis H., all coming back. Stephen R. and Victor. Victor might be a new name, so welcome, Victor. We also have Lobo Trader and Andy, Billionaire Carter, Quincy Smith, and Six String Dow. Robert Vallardo, Eric's 856, Jorge Castaneda, Woodstock 625. Woodstock 625. By the way, Jim,
Yeah.
Woodstock,
Yeah.
55th
Yeah.
anniversary this past weekend.
Wow. I am so old.
Yeah, well, do you remember it?
Not really.
I know you
mean,
weren't there, but
when was it? 60, 68,
69. 69.
69?
Yeah.
Yeah, no, I was 6, so I don't
Yeah.
really remember it.
Right.
But you get when you get into the 70s and you get the albums and you get the nostalgia, then you start learning about it.
Right. Right. Of course. The music that came out of there is amazing. Scott K, Anissa, good afternoon. G. Smith, Todd Musser, D. Merlot is back. Mark B. and R. Crawford. Crypto John is here. Thomas Bolatow is back. Mr. Freeman, good morning. Bo Hunter and Capitalist. Capitalist might be a new name. Welcome. Thanks for coming to the chat, everybody.
And Ripper remembers he was 10 years old. He remembers Woodstock.
So they were playing, there was a radio station, college radio station out here on Long Island that was playing basically the entire show over the last week, right? They'd have 3 guys who actually were there. So these guys are older. And they were playing the show in its entirety, basically over the course of the week. And I'd turn it on, and a lot of it was between, they even played the stuff between the shows, right? So between the acts, somebody would come on and do announcements, right? And a lot of them were about, okay, don't use the hospital in town. We have medical tents set up here. You're flooding the hospitals in the town. So make sure you go to the medical tents here. And it was like said with all seriousness, like that was the only announcement that they had to say. We're looking for these color pills. Don't take the blue and the green. I mean, it was fascinating, like a totally different thing that we're not used to, right? It was wild. So if you ever get to hear some of those Woodstock clips, just be on the lookout for the ones between the musical acts, because they're fascinating, for a different reason.
Yeah. Yeah. What a time. What a time. Oh, anyway, E-mini S&P's clawed its way all the way back up here, Tom. The last 2 candles. So the opening range is spoken. That double bottom kind of held. If you decide, well, back at 10 o'clock last night, there was that wick down there. Again, we achieved that a little bit, not much, but that's kind of a nice base. And now we have an area. My short-term area resistance right here, Tom, is at 36.5.
Yeah, that sounds about right. Notice cumulative delta really isn't moving that much
No.
higher. So,
No.
when I see that, I see people, buyers aren't really coming in to support this. There might be a little bit of divergence or a little bit of weakness. This could be kind of a fake out. I think is 56.40. I have this horizontal line where it's kind of near the top of the market. We wick through that level. That might be a target, but I don't think it might not hold. We might see some range bound trading today.
I agree with that right now. I mean, well, until we don't, right? So we have another area that we have to take out.
Yeah.
It's up, which is obvious. I'm being Captain Obvious right now, but I'll still draw that rectangle as well. So you got low volume up here, though. So again, top of the value area is an important level right now. We're bumping up against it. This is not a very mature volume profile yet. Well, the volume's light, so I wouldn't expect it to be. So we'll see. As Tom pointed out, maybe we're range bound, right? Maybe the idea is let's get short off the top of the value area. Let's get along the bottom of the value area. We'll see how it goes. But and that kind of trading is good until it's not, right? Eventually you break out and everyone's upset. But in the meantime, maybe it could be okay.
Yeah.
Oh boy.
Take a quick look at the Russell.
Yeah, we'll do that. Then we'll go, then capitalist, hang on, then we'll go over to the NQ. Russell, not recovering, Tom.
Yeah. So interesting thing about the Russell cumulative delta is just at zero, right? It's got a
Yeah,
big green candle now, but it's right around
yeah.
zero, maybe a little more positive than that. Yet we're still making new lows. So, who's going to win out? Are the buyers going to win out, or are they going to get flushed out? And if they get flushed out, where could this go? 2156 is not too far below at S1.
There it is.
Not saying it
Yeah.
will. I'm not saying that's what I think will happen, but we want to watch and see, are buyers going to support this market and keep this, at pivot or above, or are these buyers that are buying right now, again, going to get pinched, going to get squeezed if this market can't get above, the previous candle's close or the pivot or back to VWAP.
Yeah, and right now you have this competition going on between uh these red candles, right? A whole series of lower highs, lower lows, and systematic price behavior of the other stock index futures, right? So, if my sense is if we weren't up six, if we didn't have any green on E-mini S&P or the NASI, this would be a lot more negative, is
Yeah.
my guess, because I think there is a little bit of a systematic force here. But right now, man, I'm not hitting the buy button. Like Tom said, I think that S1 is in play. Series of higher highs, series of lower lows. Look at the is it, yeah, the
The
MACD
MACD is
here.
just
It's
the
yeah,
lowest it's been.
yeah,
The other thing to think about is average true range. Where does that fall?
yeah.
The average true range falls right about S2.
Oh boy.
So it looks huge. It looks like it's never going to get there, but this is a
Yeah.
small trading range, right? This is a small trading range today. Um, yeah, I don't know. I feel like this might be a trade idea for the break, for the 10 o'clock, after 10 o'clock.
Yeah. Yeah. I like it. So let's keep that in our back pocket here. Let's go to Capitalist says, hey, my bias for short on NQ today, but let's see. Let's just go to the micro NQ. I like that a little bit better. The volume's a little bit better. Um, and by the way, before we even do, oh, come on, mouse. Let's just go to the daily really quickly. Clearly, we're in a the bias is bullish in the long term. Today, wow, look at this volume profile, Tom. This is beautiful. I mean, it's short, right? Like you said, not a huge range yet today. It's proportionate. The volume on top of the value area is similar to the volume on the bottom of the value area. Clearly a big bulk of the volume around the point of control. So this is to your point. Maybe we're range bound today here.
Yeah, and right now I'm seeing cumulative delta kind of following through with what's happening in price. So there's really no divergence there. I think you're right. I think it's the question is what happens when it gets to the top of the value area, which is where we are right now. Does this hold as resistance,
Yeah.
or are we going to try to take out or get to, let's just say get to previous highs, which I would look at the 11 o'clock last night high as a target, which is right around 914, and
Yeah.
then further up at 930. The target we saw at 3:40 in the morning, that 930 target. So a
Yeah.
couple of levels of interest on the upside.
Yeah. So Jen Junie has the greatest question of all time. It really is. And by the way, Jen Junie, we have, and this is a question we could pose to Créde Sheehy-Kelly, who's going to be with us. She's a high performance psychologist and trading psychologist. She's going to be with us at 10:30. But the question is, if I hit my daily profit target in one trade, should I keep trading?
It's a great
That
question.
is, it's a deep question.
Yeah.
It's a deep question. So, and you guys know I've been reading Mark Douglas's Disciplined Trader again, and really a lot of his philosophy is you got to kind of divorce yourself from the P&L, divorce yourself from winners and losers, and stick with process and in your methodology, and then fine tune that methodology as you go. So what he's saying is it's kind of irrelevant, really, if you could kind of separate your emotions from the fact that you had a winner, and just look for, again, stay disciplined, look for your trade setup. If there's another one, take it. If there's not another one, don't take it. But don't get double amount of courage, right? It's like, oh, okay, I'm playing with house money. That's a losing attitude, because eventually you're not. So, good question though. The other thing I'd add, Tom, and I'm interested in your opinion, is for me, sometimes it's good to recognize when your emotions are kicking in, and just walk away, turn it off and walk away. So anyway, that's my 2 cents.
I agree. I think, on the one hand, there's some good points being brought up in the chat as well. But, if you have a plan, stick to it is a good thing, right? If you have, and that goes with your trading, executing trades, trade management, all parts of a trade, but also the greater plan, which is if you have a daily profit target and you're happy with that, right? You've thought that out, you know what that is, and that's what you can be happy with, and you've achieved it. The risk to achieving that and going back to trade is, well, you might not achieve your daily profit target if trades go against you. But there is something to be said for, somebody, I forget where it was, somebody said, keep trading. I think it was Ripper said, keep trading when the market is favorable towards your system, right? So you and I talk about, okay, we can get into a trade, maybe we do 2 unit, we get our first target, we trail it up and we get stopped out. Okay, maybe it's profitable, that's great. You can get right back in if it's favorable to what you're doing. That's great.
Yeah.
But at some point that might conflict with what you're trying to do, right? So
Yeah.
I might hit my daily profit target. It's up to you. If you're happy with your daily profit target, you risk undoing that if you go back to trade. However, there is something to be said as for if the market's favorable to your trading regimen, then you have to be happy with that risk too. You're changing the plan. Can you live with yourself with that?
Yeah, absolutely. I agree with that too. So, by the way, Tom, Giovanni Massi is here.
Oh, good.
I'm related to the Giovannis. They when they came here though, they changed their name to the John to kind of Americanized a little bit. But anyway, all right. So let's take a really quick break and we'll check out some trade ideas in a minute.
Yep.
All right, we are back, folks. Throwing some trade ideas in here. This is a breakout trade in the micro crude oil that I just put on right at the pivot. Right at the pivot point, and above the opening range, which isn't that important in crude oil, to be honest with you. But we do have this cross on the MACD. Cumulative delta is almost zero, which is okay. R1 is in play. This market's kind of been, selling off a little bit lately, but there's room on the upside. And if we don't get the breakout, we don't get the breakout. It's as simple as that. So that's what I'm thinking, Tom.
Yeah, I put in a 2-unit as well, right above the pivot. We're so close to zero on the cumulative delta. We're just about negative 77 contracts.
Yeah.
My thinking is if we can get some buyers to come in here, push that above zero, this can really move. I've got 75 in my sights, but also 75.21 is the R1. So the question is, where does it go? Now, I'm not in the trade. I'm like you. We're waiting for it to break out. So I'm happy with that target. With that.
Now, if we get a drive back down to the point of control before we get filled here, then I'm out.
Yeah. That's a good point. We are at the extreme. We would be buying at the high of the day, which is hard to do sometimes.
It is. You got to be brave and courageous, Tom.
Yeah.
So
now that being said, I bought at the high of the micro E-mini.
Great mini. Let's do it. Yes. Yeah. I'm just worried about the low volume on this one, Tom.
Yeah.
Yeah. I mean, yeah.
So
again, I don't, yeah, go ahead, Tom.
Yeah. So, volume is an issue. It is kind of a light volume day. What I do like is that it did cross above zero, that buyers are coming in. We might see a little bit of a pullback because it is the 10 o'clock candle. Sometimes, you can imagine on a 60-minute chart, on a 20-minute chart, 30-minute chart, you're getting these signals saying, oh, we're overbought, or, oh, time to, we're at the top of the range, all these things. So there's probably going to be a little bit of adverse reaction. My stop is probably way too tight, but I just got stopped out.
Yeah, I'm looking here. I want to see the point of control. I want to see the VWAP. Let's see if this is an equal and opposite, a bearish engulfing. Before this big rally time, we'd see this a lot where the opening range would spike up, and then the very first candle after that 10-minute, for the very first 10-minute candle after the opening range is over, boom, reverses. And the same thing on the downside. So
right.
Again, I'm going to be patient here and see if we can get back down to that what would be close to converging the VWAP and the point of control right now. So we did get a fill though we did get a micro crude fill. Let's go check that out. Oh, you know what? I never added it to my, let me do it. I'm just going to type in MCL. I never added it to my market analyzer. It's down here now. There we go. So we're tracing back up here in crude. We got to get some targets in and some stops in, Tom.
Yeah, so I put my stop right below the opening range low, and that's the opening range of the stock market, not the opening range of the crude market. So between 9:30 and 10, the low, which was really the previous candle, right at 73.80. That's 50 cents. Seems pretty good.
Yeah.
I think my target though, like I said, I have two targets, 75 and 75.21. I may split the difference. 75 being a psychological level, 75.21 being that R1 level. Crude has an average true range of about $2.20. So off the low, that puts us at 74.75, which we would hit before we get to 75. It's about a quarter shy of $75.
Yeah.
So, that's tempting too.
Yeah, so I got you. Yeah, I hear you. I'm thinking about today being a non-trend day. So as soon as you said ATR is around 75, I just brought my first target down below that.
Yeah, 74.75 would be the ATR target.
Yeah.
Okay, so you got that. Good, 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 good.
Yeah. Stop same place you did, maybe a little bit lower. I want to kind of respect the Globex close from yesterday.
Gotcha.
So we'll see. And again, if this kind of steam kind of runs out of steam, tightening up that stop more is not bad practice.
Right. Right.
So we know we have Créde coming up next. And after that, Tom, you've got go no go charts, right?
Alex Cole will be joining us. Yes.
Yeah, baby.
Yes. So Alex is not across the seas, but he's from over the pond, across the pond, over the pond. He's from Wales originally.
Yeah. Is Wales is part of the United Kingdom or no?
It is.
It is.
It
Okay.
is.
Yeah. Well, Créde's not. Créde's in, is she in Scotland or Ireland?
She's in Dublin. She's in Ireland.
Dublin.
Yeah.
Yeah. So she's not part of the
No.
United Kingdom.
No.
No.
But if you ever get a chance to get over there, it's beautiful.
Yeah, I bet.
Ireland is great.
I'm gonna add that to my list, Tom. That and Kansas City.
I actually like it better than London.
Really?
Yeah. And London's great. Don't get me wrong. London's a great city, but
Yeah.
I just had so much more fun in Ireland.
Oops, sorry about that. Yeah, I've been to London. I haven't been to Ireland though. I want to get there.
Jen P
All right,
is here, by the way.
Jen P in the crowd. Good to see you, Jen P. Jen P is usually first to chime in sometimes.
Yeah.
Wow. Andy wants to talk about the time and sales tab. Yeah, I don't have this formatted the way I want it, to be honest with you. I'll just pull this up. Just add it over here to block the blank space here. Right click to go to properties. And all I did on this one, Andy, for now is I have a size filter here, and I'm just looking at the E-mini S&P, and I'm looking for trades over 20 contracts. All the ones and twos and threes I'm not looking at. I don't care about that. I want some bigger. I want the bigger numbers. So the other thing is it's color coded, right? So I want to know what trades are happening on similar to cumulative delta, what trades are happening on the offer, what trades are happening on the bid. A series of green with big numbers could suggest upward price action because trades are happening on the offer. And so that's how I have it set up. You could customize this to however you want, including colors and columns and stuff. So I have a real simple layout here, but it's how I have my eye on it. You see 104 come in and raises an eyebrow, right? You see 76 come in and raises an eyebrow. So it also helps kind of like you're thinking about, well, there's support here. If you see some big buyers coming in at support or at a pivot or at a one of our areas of interest, it could suggest that, hey, they're going to hold the line. Price is going to hold the line.
And Andy, those are filled orders. That's the sales part of that time and sales window. So it is actually, those are orders that were matched in the order book.
Yeah. Good point. So Tom, no velocity on this breakout trade here. I'm a little worried about that idea. I mean, going back to the daily chart, we're definitely I'm gonna draw a fib line right now, but we're definitely in kind of a bearish disposition here. Let me put the fib line in just to kind of short inside fib right here. 37.5 is a long way away. It's close to that 75 number, Tom, and crude that you talked about.
All right, devil's advocate, ready?
Yeah, do it.
Okay, daily chart that you have there, lower low, higher close, right? Okay,
yeah,
that's nice, right? So key reversal, but we'll see how strong it is, right? That low today did not really take out the lows from 2 weeks ago, but it came close. It took out the low of the big green candle on the 7th, but it's not the lowest it's been. I think that's a little bullish. I think the fact that we retraced, we pulled back, and we didn't get as low as before could be a higher swing low, right? So that's bullish. What I'm looking for is where's the midpoint of yesterday's candle?
Yeah, right
So
there.
open to close, on crude, you're looking at about 74. Let's say, what is it? Trying to do the math in my head. 74.50 looks about right. 74.50, let's say.
So I'm doing like I don't do the math, Tom. I
You
just do
just,
like,
you
I
just
squint my eyes. I look at the candle. I'm like, all right, we're about here.
right, right. Yeah, that's fine. 70. So wherever that is,
Right.
that is a piercing line, right? So I
Yeah.
want to see that market get back up there. Can we get back up there? Yes, we'll still have a lower high if we stop there, right? But that's a pretty strong rebuke to where we've been trading, compared to yesterday. So um my target, my first target is a little bit higher than that. It's at
Yeah.
72.
Yeah. I'm 73. Yeah, I gotcha. We could always fine tune that as time goes on.
Yeah, what's worrying to me is we haven't made a new high on the intraday in this candle, although it is fairly new. We've got 9.5 minutes, and it looks like we might be getting back up there. So
Yeah.
I think it's patience. I think this is a trade that we're not looking to get filled in the first 10 minutes, right? I
Yeah.
think this is going to be a little bit of a slower burn, and one that we revisit, one that we monitor. So as we get higher lows, hopefully, yeah, we could trail our stop up. I wouldn't want to give back all the way to yesterday's close if we got almost to our first target and turn around. Um, but I'm not expecting this like a big momentum move at 10 o'clock or 10:10 on a day where there's no news in stock index futures or the crude market, planned.
Yeah. I hear you. And I have a minus
Oh, look at
25% harmonic.
look at that.
Look at that. How about that? I got to change the color on that, by the way, so you can see it better.
And you didn't even plan that. That just happened.
I did. It was, yeah. And what I did though, Tom, is I went from the lows of the session to the high of the opening range. That's how I have it anchored.
Got it.
So yeah, you could move it up to the high, you could tweak it, but I think that's a good demarcation. Even though its opening range isn't necessarily related to crude so much, from a volume point of view across all the asset classes, I think it is.
Yeah.
Interestingly enough, the end of day, the equal weighted futures is on the S&P is down 6.5, whereas the index itself is only down $1.
Okay.
So that tells me that, maybe the big six are carrying a little bit more of the water, but actually it's pretty close. So I've seen a bigger discrepancy than that. Mario tried for a second short try on the retracement of the ES. He is covered. Let's take a peek at the ES real quick, Tom. Wow, look at that.
Oh my goodness.
Again, we're hitting that area of support down here. 56.26, bouncing off it, trying to do its best. Cumulative delta is super negative. Absolutely right on that one, Kevin. MACD's about to cross under. This might be a good breakout trade on the south side. I'm going to throw one in on the micro E-mini S&P real fast. I could move my mouse. Do I have the right account open though? Let's just make sure. Yeah.
Yeah, you're right at yesterday's close, right?
Yeah, so here's the thing though, guys. I mean, this area supports keen, right? It's happening. It's blocking the marketplace right now. And I'll draw that rectangle just to kind of show you. Um, so I don't want to be too tight. Like if I would have been right at the bottom of the open range, try to get short, that would have backfired.
Yeah.
So maybe give yourself some room below let the market kind of work it out. Like, all right, we're below the close, Globex close now. Let's keep rolling. In this case, by giving yourself a little extra distance, you're not going to get you're less likely to sell the low. Does that make sense?
Yeah. Yeah.
But this is battling pretty hard. So now I'm second guessing my idea.
This could just be, the nature of a low volume, range
Yeah.
bound trading day, right? So you see
Yeah.
these markets, rushing for the exits or rushing for the stars, and then, oh, that's enough for me.
Yeah.
It turns around. But, you know, the question here is, are you looking at the micros? This is where I think Mike and I talked about this on the midday wrap up a little bit yesterday, which is there discrepancy between cumulative delta in the bigger contract versus the micro?
Yeah.
I'm not seeing it. I'm seeing
Okay.
negative numbers in the E-mini S&P, just like you see negative numbers on the micro.
Yeah.
So maybe this will continue to sell.
Yeah. I don't know. I'm not, because I don't have conviction. I'm not going to do anything.
Yeah.
I don't have conviction. I see this point of control, this value area is kind of immature still. Low volume. I'm not surprised. We're not, the range is tiny, Tom. Let's see what the top is. 43. The bottom we're at right now is 25. What is that? I mean, that's not even 20 handles.
Yeah, see, this is where I think I'm going to do a breakout trade to the
Yeah.
low side. And the
Okay.
reason is that cumulative delta is just went hard negative.
Yeah.
Hard negative. It's a fourth of its average true range, a quarter. You said 20 handles.
Yeah.
The micro E-mini is 86. So it's not even a quarter. This has room to go.
Yeah.
Even on a light
Okay.
volume trading day, if
Yeah.
it gets to half, that's another 20 handles. Is it going to
Yeah.
do on the upside or downside? I don't know.
Yeah. Yeah. I'm
So,
looking at time and sales for the big E-mini S&P right now, and it's kind of, these 25 lots, these 37 lots are equally weighted,
yeah.
color weighted. Now we're making some new lows here, so we're getting some bigger sells in here. So you might be onto something.
So I just got short, but of course, as any trade, we saw a little bit of we're taking a little bit of heat,
Yeah.
but oh well. I'm going to
Yeah.
put in some
I'm gonna
targets and some stops.
There you go. I'm gonna keep my hands in my pocket right now. I'm gonna measure that 3 candle rally. I'm gonna look for
Yep.
these negative numbers, these numbers bigger than 100. 278,000 traded so far. Yeah, I don't know, man.
That's
Yeah,
low. That's really
yeah,
low.
yeah. We have that MACD is starting to hit that zero line. Not quite there yet, but trying to get there. This could be a case where if the dam breaks open, it breaks open.
Well, that's what I'm thinking is, and again, even if it gets to half, right? Even if it gets to half of an ATR, it still has room to go to the downside because that's where we
Yeah.
are, right?
Well, okay, so where are you short at? Or are you trying to get short?
Let's see. Sorry. 24.25.
Okay, right where we're at right now.
Right where we're at now. Yeah.
All right.
And my first target is the pivot, which is 0775.
Yeah.
And this is a micro, this is 2-unit micro, so we're not, this is something we can experiment with, get 1 unit off. It's kind of ambitious if you think about, how many ticks we've gone today so far, but we've got about a 20, what did you say, 20 handle range? I think it's a little
Yeah.
lower now. It's
Yeah.
20 handles, right? So,
Yeah. Yeah. And I'm not going to go long out of respect. It's like you go to the casino with your buddy
yeah,
and he's throwing the dice, but the pass line. You don't play the don't pass line
I
when your
don't,
buddy's rolling and he's playing the pass line. You got to go
okay.
with him. That's just it's a rule.
Yeah, that's roulette, right?
The craps.
I know.
Yes. Oh my God. Oh no. Have you been to a casino ever?
I have.
Okay. Just checking.
We actually in Arizona, in Phoenix, there was a grand opening of a bar or a nightclub that was one of the Arizona Diamondbacks was the
Yeah.
special guest. So we
Yeah.
went with him and
Yeah.
met all the minor leaguers and all that. That was fun.
Yeah. That's awesome. Yeah, a long time ago I played craps with John Carter
Oh
and
yeah.
Hubert Centers. And those guys are just crazy. Crazy, crazy. Anyway, um, we'll see how it goes here. It's being stubborn, man. This area support's being really super stubborn. Globex close again. We're right there. Benchmark candle, to your point. Nice benchmark candle. Now we have a brand new candle. This is where you're going to be right, Tom. I have faith
Yeah.
in you. Because look at that. This is the VWAP. What we crushed the VWAP. Sellers are under control right now. Look at my time on sales in the lower right. This is just all big contracts on the bid right now. You see that little L that pops up there? That tells you it's making new lows. So you have a lot of bigger contracts in the E-mini S&P, which is correlated here, of course, on the sell side. So this is look at that. Cumulative delta is huge. I think you're onto something.
Yeah, we'll see if it stays, right? This
Hopefully,
again could be a slow
yeah,
grind, right? Um,
yeah,
Small volume generally results, not always, as we can see, but generally
yeah,
results in smaller ranges. So to get to even to a 17-point trade target, whatever you want to call it, it could take
yeah.
some time.
So Capitalist is in Spain right now.
Oh,
Took a Nasdaq buy trade after the gym. Well, the gym, that's a good thing. You went to the gym. That's a start in the right step in the right direction.
yeah.
Let's check it out. NASI, same thing. Systematic price behavior, folks. We're seeing it on both stock index futures here. But this bottom did hold so far, double bottom so far on the NASI, which is, I guess structurally this is different. I take it back, Tom. The last two candles in that, but this candle is fighting back a little bit more. So we'll see. I mean, the point of control is clear and present, right? It's
Yeah. Right there in the middle, right?
yeah. I would probably at this point, I'm going to wait to see what happens to the ES, but um, cumulative delta is pretty negative right here. MACD, it's just toying with us right now. Look at that. I hate this when that happens. It's like they're about to touch, about to touch,
About to
about to
touch,
kiss.
but the market's getting a little bit of a bid, and look, that happens, right? That happens on low volume days where
Yeah,
this market can get pushed around a little bit, and um, the question is what's happening here, right? We don't have a key reversal. We have a higher low. It's not quite up to the piercing line at all. That was a big dominant candle in the previous candle. So this could be a little bit of a fake out before it continues on down. Conversely, it didn't cross on the MACD. Maybe we're seeing a little bit of a turnaround. It's early, I think.
yeah. Although, again, I'm going to look at that VWAP. I'm going to look at that point of control as maybe a destination to maybe get short. I don't know. We'll see how it goes throughout the
Yeah.
day.
Yeah.
Mark says, I live close to the Hard Rock Casino in Northwest Indiana. Never been there yet. So in my old life, a long time ago, when casino licenses were being given out for the first time in Indiana, I was doing environmental consulting and other infrastructure consulting. And so I was hired to help relocate a train track.
Oh,
That task it would be easier to move Mount Rushmore to a different state. That's
wow.
how it was like, whoa. The railroads have this weird power over everybody.
Couldn't you just go at night and start digging up those rails and taking the wood beams off? Couldn't you do that
Uh,
when nobody's
um,
looking?
Yeah, nah, it was crazy. Anyway, so Tom, let's go back to the MES. We got a question. Wait, you're in the MES, right? Yeah.
I am. Still.
So Simo wants to know where your stop is.
Great question.
Yeah.
So I put my stop at above the average range, above the value area high, which is at 40.25 is my stop.
Oh, you're way up here, huh?
Yeah, so my thinking is again, this is a small trading range. So even though it's a lot of the trading range for today, I'm trying to get another 17, 18, maybe 20 handles out of the first unit, right?
Yeah.
So I kind of feel my stop has to be about the same distance.
Yeah.
We get that first unit, we we tighten things up, right?
Yeah.
We trail, we break even, then trail, and then decide, do we want to get a second unit at maybe S1, or do we want to just let it run? Because if
Yeah.
we get my first unit, that's only half the average trading range, right? We could,
Yeah.
if it's an average day, we've got a whole nother 40 handles.
Yeah.
So I don't know. It does seem like a lot when you look at it on a chart because it's almost the entire trading range, but this is where I think we have to put aside what the chart is showing us and look at, absolute value in addition to, kind of the shape of the chart.
Yeah. I think you're on the right side of history so far, Tom.
Well, lower high,
It,
lower low, red candle.
yeah.
Cumulative delta is a little bit lower,
Yeah.
again, this is a longer term trade. It's not a quick in and out.
Yeah. We're being stubborn right here, folks, is what it is. This is being stubborn. Price is being stubborn right now. My time and sales on the lower right, though, is still showing some bigger trades on the bid at the lows. You can see it on the lower right here. I know I'm comparing E-mini S&P to micro E-mini S&P, but these are correlated very, very tightly. So you could use that as a crutch, as a tool to analyze the micros.
Yeah.
So 310,000 only, man. Wow.
Quiet day.
I need to get us like a lake house or something. And then I
Why,
could take
why is that?
the last 2 weeks of August. I'll just until Labor Day, I'll be gone.
Oh, yeah. I
The
get
lake
it.
house. That's what people do.
I heard.
I think, yeah. Or if you're European, you go to Spain or Portugal or Italy,
Right.
I guess.
Whoa.
Yeah.
Sam Semry, welcome,
Yeah.
Sam, says Nazi is short today. So let's maybe take a look at NASDAQ again.
Let's do it. Sam, good to see you. Thanks for being here with us today. Really, systematically, this is looking real similar but different. Again, we have this double bottom here. Let's get my data. We'll be piling in here in a second. This is the micro NASDAQ, by the way. And then my fib line's still in play here. Man, we're just having a hard time getting through these bottoms.
Yeah, we're still in the opening range. This is Mr. Toad's wild ride right here. We had three. Look at that. We had three white soldiers, right? Three strong bullish
Yeah.
candles, and then they
Yeah.
didn't follow through at all.
Right.
Turned right
One,
around, came
two,
right back to the low.
three. 1, 2, 3. Right. So these are the three white soldiers. These
No, I
red
know what you're gonna
soldiers? No.
say. Three black crows. No,
No. Okay.
no,
Just because of this wick, because of that wick.
Well, more like you've got, one dominant candle. Usually you want those crows or soldiers to be about the same size, give or
About the
take.
same size. All
Yeah,
right.
yeah.
Right. And then the white ones are. I mean, they're like the same size
They're
body
almost like
candles.
textbook,
Yeah.
right?
Yeah. You see these guys coming at you, you get out of the way.
Yeah, but here's the thing. It doesn't matter if they're three black crows or not. We came back to the low of the opening range in three
Yeah.
candles. It's almost like really nice example on the upside, and then doesn't really matter. Kind of a not so great example, but still got the job done. And now we're making new lows. So Sam
Yeah.
Semery might be onto something here.
Yeah. Yeah, for sure. I mean, this almost like suggests to me like, all right, institutions came in, they put their orders in, they're done for the day, and everyone else is doing the opposite.
Yeah.
which might not end well.
Yeah, just be
So,
careful on low volume days.
Yeah.
Everybody wants a trend, right? Everybody wants to take a trend. And, not every day is a trend day. So your conviction to say, I'm going to take this trend. I mean, I'm guilty of it. I'm trying to get to a place in the micro E-mini that it just isn't getting there yet.
Yeah.
Right. That's indicative of a range bound low volume day. But, I also look at it as it is very, very short range today. So playing some sort of probability or averages,
Yeah.
we might get a little bit more extended on one side than we are now.
Yeah. So let's do a real quick lesson learned here, Tom. Créde is here. I want to get her up and running. She's got some great intel for us. Right now, we're kind of on the micro crude. We're kind of in limbo right now. I don't like the fact this is taking so long. I'm looking at the bands, the VWAP bands, and I'm thinking of raising stops up toward that lower band. I get a sense that this kind of really is stopped, dead in its tracks. So I'm going to move it up.
That sounds good. I've got Alex after Créde. I'm going to watch this trade for another half hour and then get out of it if it isn't fulfilled.
Okay. Well, we'll be rooting for you, Tom. We'll keep an eye on it as well. Okay.
Thanks.
So coming up next, folks, and we'll do this out of order. Tom's going to be with a Traders Workshop. He's going to be with Alex Cole, Go No Go Charts. Alex is awesome. But coming up next, my humble opinion, more awesome, is Créde Sheehy-Kelly. Créde is a high performance coach, focuses on traders, and I can't wait to get her in here. So we're going to take a quick break, and we'll be right back with Créde.
Awesome.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit ninjatrader.com to get started today.
All right, let's talk futures. Joining me live from Dublin, Ireland, Créde Sheehy-Kelly. Créde, how are you?
Hi, Jim. I'm great. Thanks. Great to be back again.
Thanks for being here with us. Now, just for those of you who don't know, I haven't been to an event here with me and Créde. She is a high-performance psychologist in Ireland, but focuses on traders, does a lot of work internationally, and has some incredibly great insights about the psychology of trading, which we know is probably one of the most important things we have to deal with. So thank you for coming on the show.
Not at all. It's a pleasure. My pleasure to be here.
Yeah. So I know we were going to talk about trading on tilt and some of the other things that a lot of us do all the time, but I did want to introduce there's a series of famous books written by Mark Douglas, and one of them is called The Disciplined Trader. And in his book, I was rereading his book this weekend, and I was thinking the whole time, I'm like, did Créde write this book? I mean, all his points are exactly what you've been talking about. It's incredible. And I'll give you some quotes, which really struck home with me. And I want to give you the quote and get your opinion on it. And I'll just quote him. Release yourself from any feelings of inadequacy, guilt, or shame.
Yes, that in a nutshell is the key to performance psychology, to trading psychology. Like for me, we've talked a lot about the subconscious influence on your, the actions you take when you're trading. And at the basis of those, it usually boils down to a few key emotions and a few key limiting programs that are linked with self-worth, shame, a sense of lack. So I think he's nailed it there for sure.
Right. And then, so you don't really get that. You don't really understand that until you trade it, right? In with respect to the trading world, right? So if you're brand new to trading, you don't know you don't really get it. But once you do trade, then you start getting it because you have these feelings that pop out.
Absolutely. And this actually came up in a question in my course the other day. So there was a trader who was newer, who'd gone through sim and was building up confidence, trading really well. And then they were asking, like, why is it that suddenly when I go live, my confidence drops? I'm not performing well. Like, what's happening? And it is exactly what you're talking about. It's all fine when you're learning the technical piece. And then suddenly when the pressure increases and you're trading live, that's when all of these psychological issues will come to the fore. And the market, you can't hide from the market. It's such a tough taskmaster. So it's likely when someone starts experiencing these challenges in their trading, it's actually likely that those themes are present for them at a personal level across the board in all areas of their life. What happens is that you get away with not being faced with them fully. They're probably impacting you. But as soon as you go into an arena like the market or high performance sport, there's nowhere to hide from it. It's so pressured and the margins are so small that that's when you'll see it. And that gives people then a motivation to actually overcome it. But then the flip side of that is if you work on overcoming that, because of your trading psychology, it also benefits other areas of your life then.
Yeah, no, I mean, I remember early in my career, right? And I'm trading. I'm like, you know what? If I could make an extra $2,000 this month, I'm going to buy, XYZ, whatever thing I was fancying at the time. That's not a good strategy.
It's not a bad strategy. I mean, we have to be realistic. So everyone is trading because they want to make money, and that's the truth of it. What people want to do with that money is different. People have different ideas of how they want their life to be or what things they want to buy, etc. It is an outcome focus. So, but even the fact that you're saying that on a month basis is not so bad. If you were saying that on a daily basis, that's where people trip up. So it's not that outcome goals, like having a profit goal for a month or for a year, is a bad thing. We want them. They're the measure of performance, but we want to kind of set them and then park them and then focus on the execution of our plan. So I would say that having that goal and, you know, knowing what you want to buy with the money is fine. It's motivation. It's why you're trading in the first place. But as long as you can park it and then switch your focus to a process focus when you need to, then it's not detrimental to you.
Okay, so I like that. So that goes to, going back to Mark Douglas, release yourself from the notion that each trade has the potential to fulfill all your dreams.
Yes.
That's that $2,000 a day thing, right? That's like, I'm going to make 2,000 today because I need to buy, you know, a new fish for my fish tank or whatever.
Exactly. I think that's a place where people trip up a lot. And even in entrepreneurship, it's the same, where people put such expectations, like they place such an emphasis on every trade or, you know, entrepreneurship, every sale, every day of revenue, that they're actually constricting what is possible. It's not realistic to expect the market to be delivering like that for you every single day. So you're asking too much. And when you have those unrealistic expectations, it heaps on the pressure. And then pressure is what creates or exacerbates any issues on a psychological level. So yeah, it's when you put so much store on every single trade, either in terms of the P&L and making money or in terms of your self-worth. So I'm a great trader if I make this trade, if I make money on it, and then if I lose it, oh, that's showing me that I'm a terrible trader. I'm never going to make it. I'm never going to be able to quit my 9 to 5. Like, people actually generalize massively based on the performance of one trade. And that's where you start tripping yourself up. So it really is. And I'm sure as I told you, I haven't read that book, even though I'm fully aware of all of his books, but I'm sure that he talks about this, of being detached and being able to kind of sit back and not get so emotionally involved in every trade. I'm guessing that he covers that. And that's what we'd be talking about here. It's that ability to stay a little bit detached, do your best to perform well on every trade, but not get so invested in the outcome of every single one.
Yeah. And so, all right. So we have someone in the in the chat. You know, we're streaming a couple chats live right now. And Jen Juni says, "Hey, I had a good trade this morning. Should I continue or should I stop for the day?"
Oh, that's a good question. So I would say continue, but depending on your rules. So sometimes people, they think about the rules in terms of, you know, where to enter a trade, where to exit a trade, but they don't think about the wider boundaries that they place on their own trading. So to give you an example of some of the rules that I'm talking about, it could be limiting yourself to 4 trades a day. It could be limiting the time frame in which you are trading. So there's a 2-hour window and then you cut it off. So the question of, I had a good trade, should I stop? Not necessarily, if it's not part of your wider rules of how you trade, like the boundaries within which you trade. And definitely we're looking for optimizing performance. So we're not trying to cut people off or stop them from capitalizing on a good day. It's whether you have the mental resilience to be able to keep trading and keep focusing on the execution of your plan and not get caught up in the fact that you're ahead or you're behind. If you have that capacity, then continuing on within the boundaries of your trading day is perfectly fine. It's more like kind of in the moment solution. If you're struggling with trading psychology, where you have a good trade and then you say, okay, if I get to, let's just pull out a number, $600 in a day, then I stop trading for the day and I just bank that and I wait for the next day. Maybe you would have a rule like that if you were actively working on your psychology at the moment. So there would have to be a very strategic reason for doing that. Otherwise, you're kind of chopping yourself off from capitalizing on what's available in the market.
Yeah. And thinking about the definition of greed, right? All right, I'm on a roll. I had a great trade. I'm invincible. You know, I want to make more money quickly. Greed is one of these things, I think, and correct me if I'm wrong, where there's no limit to it. There's no measure to it. You always want more and more and more, and that could be a deadly sin here.
Yeah. So again, it depends on what you're psychological makeup is, what you're struggling with or not struggling with. But in terms of greed, it comes from a sense of lack. So sometimes people focus on the greed and the wanting to accumulate loads, but actually it's stemming from a root emotion of lack, scarcity. And because that's an emotion or a subconscious belief, it's not something that can ever be resolved unless you actually target the subconscious belief and change it at that level. So, and, you know, we're talking about revenge trading, trading on tilt. Absolutely, that sense of lack and that which manifests as greed can be a big driver for people just pushing. So I would say that, yeah, if you're feeling in a state where you feel like I'm just going to push this to the limit and I'm going to keep driving forward, you're probably not in the best emotional, mental state for trading that day. So this is why it's so important to have these boundaries around not just the rules around how you trade, but also around like when you trade and when you stop. Because what we want to do at all times in trading psychology is to remove any subjective in the moment decision making, or as much as possible. Because when there's bandwidth for you to just decide, oh, I'm on a roll, let me keep pushing it, and that's not checked against any rules, then that's emotion-based trading. Even if you're up and you're feeling good, it's still emotion-based trading, and it can as easily just flip back the other way. So we're trying to create as many boundaries and rules as possible so that it's all logical and it's not driven by emotion.
Yeah. Now get into that trading on tilt. Now you may have coined that. I've never heard that before. When you're like, hey Jim, let's talk about trading on tilt. What is define that for us?
Oh, that's so interesting. I actually I've only picked that up from traders. Like, so I think a lot of people would describe it like that. I don't know, maybe it comes from poker or something, but it's when you're in that mindset of just the consequences have gone out the window, you've completely detached from them, and you are just, you know, going to keep trading no matter what. It's usually linked with emotions like rage, frustration, resentment, anger, when you've taken a few losses. So the most common time where people start revenge trading or trading on tilt is when they've had some losses and it's put them in this negative emotional state. And then the mindset is, well, I'm going to avoid ending the day red at all costs. So I'm just going to keep trading and keep pressing the button and keep putting on trades to dig myself out of this hole. And, you know, it never really works. Or actually the problem is that sometimes it does work for one day, but if you look at that, you zoom out and you look at that over a longer time period, it always ends up with people losing money. So it's a habit that can reinforce itself, but it's a really detrimental habit to have.
Yeah. And all right, so I'm going to use the word psychological in a general sense. You get in that, and I'm a victim of it, right? I've gotten in that mode, and you know, part of it's my ego saying, "Oh, I'm going to get this back. I'm going to get this back." You know, I'm right. The market's wrong. You know, all the things that, you know, we shouldn't do, right? The market's never wrong, right? It is what it is. But you know, you get in that zone, the bad zone, and it's hard to pull out.
Yeah, it's really hard to pull out, because it's actually, if we look at why it happens, people, there's a few kind of common reasons or factors that combine together to create this in people. So one is the pressure, which obviously there's a level of pressure inherent in the market, but if you've taken 3 losses in a row, you're going to feel significantly under more pressure. So the pressure kicks in, and then one of the key reasons why people are even able to go on tilt is that they have a numbing coping mechanism for stress. So just to explain this in the trading sense, it would be where, you know, you're losing thousands maybe, and you keep going. So logically you would say, if I'm losing thousands, that's really painful. It would be painful enough to get me to stop and draw a halt. But if you have a numbing coping mechanism to deal with stress, and this comes from childhood usually, and we use it in lots of areas of our life, so it's not an uncommon coping mechanism, it means that you kind of dissociate from what's happening, from the current moment and the consequences of your actions. And that allows you to just, in a very numb state, keep on trading, keep losing thousands, and you know, you don't stop until suddenly the day is finished. And then you're looking at it and saying, what happened? It's like someone else took over my trading. So the pressure, if you're a person that uses that coping mechanism, and then if you have any kind of subconscious limiting beliefs or projecting self-worth onto the market, that exacerbates it as well onto your trading results. So there's a few factors that combine together to create this state in people. But one of the most common characteristics across all of the traders that I've worked with, specifically with this issue, has been that tendency to dissociate or numb out when they're under stress. So it's something to watch out for.
Yeah, no, that totally makes, you're not possessed, right? You have the you have the keys to your own release. And the next day you're like, why did I do that? And now you're guilty about it.
Exactly. And it's like, again, it's like an emotional hangover. So if we just pull it out of trading and look at life, let's say someone's under massive stress and they go binge drinking for a weekend. It's the same idea. It's like you're trying to relieve the pressure with a short term, in the moment, something that makes you feel better. And that's at the expense of the long-term consequences, or, it's going to lead to long-term consequences. But in the moment, you're choosing the short-term benefits over the long-term consequences. It could be somebody, eating sugar because they're stressed and it makes them feel good in the moment, doesn't deal with the stress, and then they're annoyed at themselves after. So it can be in very small ways that people engage in this. It's not just isolated to trading, but obviously if you do it when you're trading, there's a ton at stake. You really could lose thousands. And I work with traders who lose thousands on a daily basis because of this issue.
That's a personal point with me. Sugar is my kryptonite.
Yeah.
And I could go months and months without it. No, no ice cream, nothing like that. And then all of a sudden I'll have these moments where the floodgates open up, right? So the barriers, the dam collapses on me. And that's kind of a good analogy for some of these problems we experience with trading.
Yeah. And again, it's pressure. So even if you're really highly disciplined most of the time, say if it's around sugar, you could swap in or out trading sugar, alcohol, people use lots of different things, but it's all the same kind of mindset. So you are keeping yourself under a certain level of pressure and you're withstanding that pressure, and over time, and then something breaks and you're just like, I want to get rid of this pressure as quickly as possible. And that's when you'd end up eating the sugar. Or for the trader, they're fine with the first loss. The second loss, they're getting agitated. The third loss, the pressure has just increased to a level that they can't withstand it. And then they go, screw it. I'm just going to, I'm going to earn this money back. I'm just going to keep trading. And in the moment, that feels good because there's the hope that they can make it back. So while they're placing the trades, they're getting that dopamine hit. The hope of turning it around is still there. And that's kind of like a balm to that pressure. But unfortunately, it's because they're numb from the consequences of what they're doing. Inevitably that ends, and then you have to face the consequences, and that's when it's really painful. So it is actually one of the most common challenges that I've seen traders facing. It's one of the most searched terms, revenge trading at least, on YouTube and that. So I know that there's a lot of people struggling with this to different degrees, but it's a really common challenge.
So but revenge trading, the term suggests that, hey, the market did me wrong. I was right. The market did me wrong. I want to get revenge on the market. I'm going to turn this around and change my P&L. Is that part of the thought process?
Yeah. So actually, just to be a little bit more clear on it, they often go hand in hand. So the revenge trading is exactly that. There's a sense of frustration, anger at the market, but usually it's anger at yourself, but you're projecting it onto the market, sense of being hard done by. So all of those emotions that combined with that pressure trigger this dissociation, this sense of separation. And then that leads you to start taking all the trades. So the going on tilt is nearly like the second part. The first part is this mind frame of revenge trading, and I'm going to get this back. And then the action is going on tilt, where you're taking all of the trades and you're just not stopping, like you're going way past your daily loss limit. So it's nearly like one comes first, then the other happens. So yeah, sorry, going totally off topic, but that's basic here.
Yeah, no, I get it. And so in many trading platforms, there's a reverse button, right? So if, let's say, you're long a position and you change your mind, you're like, oh no, the market's going the other way, and you click on that reverse button to go short, just outside of your plan, right? So when you're doing that, your plan is out the window. The reverse button is the worst thing in the world. Nobody should ever use the reverse button unless it's part of their plan ahead of time, but it's there on a lot of platforms, right? So it's got to be a part of your plan ahead of time. Otherwise, you're just reacting to price at the moment, and you haven't let yourself release yourself from your longer term objectives.
Exactly. It's emotion-based trading. So the emotion is strong and therefore you're just taking action based on that. Whereas if you could completely calm down your emotions and be very cool and composed, you would know that that wasn't part of your plan, and so you wouldn't take the action. So there's two kind of key ways at the root to address this. One is to reduce the amount of pressure that you're under. So you're not going to reduce the pressure of being 3 trades down objectively, but what you can do is reduce how you are feeling, like the level of pressure that you feel under in the moment. And if you can pull that down to a manageable level, then the likelihood of tipping into that going on tilt is less. So for quick examples of what you could do around that would be things like breathing exercises, progressive muscle relaxation, which is like a quick in the moment way of de-stressing your mind and your body, where you tense your muscles and then you forcibly release them while you're breathing in and out. It's a whole sequence of things, but it can be done quickly. So the idea is that you're actually working on yourself to pull down your pressure levels, and that allows you then to start taking control of your mindset again and taking control of your actions. The other thing to do is to work on this tendency for dissociation. So there's really simple, practical things that you can do to keep yourself anchored in your body and present with the market and the consequences of your actions in the moment. And that's something that you have to practice over time. It doesn't change overnight. But if you start using those techniques to keep your awareness and your sense of being anchored in your body really strong, that can also counteract the tendency to go on tilt as well.
Yeah. And one of the tricks I use, I don't know, and I'm going to ask you how you feel about this. I have a notebook and a pencil, and I write down what I'm doing, right? Before I do it, I write it down. When I get my fill, I write it down. And then whatever happens, I'll put a couple of notes in there of why it met my expectations or why it didn't. And by making that physical detachment from the mouse and the keyboard to a pencil and paper, that helps me.
Yeah, that's actually one of the techniques that I would definitely suggest. So you're already doing it. What you're trying to do is disrupt that automatic process. So angry emotion or resentment or whatever you're feeling, and then just automatically placing the trades. If you can interject in the middle of that and regain control of your conscious mind, like pause it, so just break that automatic chain, then it allows you to actually take control again. So what you're suggesting of journaling is a great way to do that. So even other suggestions of things you could write down to help with this challenge would be naming the emotions that you're feeling. So there's actually research to show that if you just name the emotion that you're feeling, it actually reduces the charge of the emotion. So let's say that you're feeling really angry because you've lost 2 trades in a row and you're blaming the market. If you literally write down, I'm feeling angry, that is a way to start taking control of your emotions again. Then maybe even reflecting, like you say, journaling after each trade. And it would be important to journal after a winning trade and a losing trade. So you don't really distinguish. It's just a practice that you do it. And so you're saying, did the trade do what I expected it to do? Did I follow my plan? And if I didn't follow my plan, what was the way that I broke my rules? And what was the predominant emotion that I felt throughout that trade? And one, it does exactly what you're saying. It disrupts that. It keeps you anchored and centered, and it kind of keeps you in control of your trading. But then 2, you actually get a ton of data that you can analyze over time to see patterns. So you might know that every time you feel bored, maybe that you tend to break your trading rules, but you see that because you see it in the data that it's a pattern, and you've collected that data over every single trade for a month. And then you can start to see, okay, I know that if I feel this specific emotion, that's a red flag to me that I'm likely to break my rules in this specific way. So it actually gives you information to use to help you to overcome the challenge.
Yeah. And for me, I don't know if this is true for all human beings or not, but when you write something down with a pen or pencil, I feel like your brain processes that information differently, and you could remember it longer than if you just dictate or type or, do it something else.
It's a little bit more active. So I would agree with you on that. I'm actually not sure of the science behind that, but for me, that's true as well. Like if I write something down, I tend to remember it better. You're engaging more of you're engaging your motor skills as well as your brain. So you're kind of using more parts of yourself to encode it.
Yeah.
So I think that when we're talking about trying to stay present and instead of detaching and numbing out, then that makes sense that writing it down rather than even typing it. Obviously, typing is probably, you're still using your fingers or whatever. But I think it takes that little bit more of proactivity to write it down. So I think they're excellent in the moment techniques that you could use to really help with this challenge.
Yeah. I mean, as an example, if my wife says, don't forget to fill in the blank, I'm writing that one down.
Wise, very wise.
I'm right. I write that one down. Anyway, we have a lot of kind comments here in the chat. I appreciate that. Mav Trader says, I believe trading on tilt comes from the days of the pinball machines and causes a tilt by shaking the machine until it shuts down. I like that analogy.
That's really interesting. I never knew the root of it. That's super interesting.
Yeah. There used to be pinball machines before we had video games. So you might be too young to know
remember them.
Anyway, let me pivot. Let's share your website here because you got some good stuff on here, and I want to make sure people know how to find you. The website is called Créde Performance. Now, I'm not from Dublin, so I had to learn how to say Créde. There's an E in there, but that's the website right there.
Yep, that's it.
And then you have this register now thing. What is this free trading psychology masterclass? What happens when I click on that?
So this is actually a free masterclass that's kind of on demand, and it goes in depth into 3 of the main challenges that traders face, and it gives you practical strategies to deal with it. So it's like an in-depth training, and there's also 2 resources that go with it that actually will help you to apply that training in your own trading. So rather than just talking at you, you actually, learn something and do some exercises to cement that and integrate it into your trading. So that's free and available at all times.
Okay. Awesome. And I cut and paste that into the chat. So everybody can see a look at it. So, and I lost all of my screens when I did that. So here, bear with me one more second here, because I know Alex Cole's coming up next. Hang tight, everybody. We're going to get there as soon as I get my little window up here. Nope, not going to be able to find it. That's okay. But let me just end with this. I appreciate your time with us today. It's been awesome, and I'm looking forward to having you back. And thanks for all your great intel.
Thanks, Jim. Lovely chatting to you, and talk to you guys soon.
Oh, by the way, though, before I leave, could I just throw this out? You're from Dublin, right? You live in Dublin?
I live in Dublin. I'm from Dublin as well. Yeah.
How great is Guinness beer?
I'm going to ruin all your ideas of Irish people here and tell you I'm actually allergic to it. I'm celiac.
What?
So I can't even drink it. Yeah.
Oh,
I do. I think it's more popular outside of Ireland than inside of Ireland. It's pretty good export for tourism reasons, to be honest. But
oh, it's popular here. It's my go-to, right? It's my
Is it
go-to
really?
here. Yeah.
You know what?
Really
One
is.
thing to do if you're ever in Ireland is go and see the Guinness storehouse. Like there's an exhibition there.
Okay.
That's actually worth doing. Even for someone who doesn't drink it, it's a really good thing to do for a day. It's a good tour.
All right. Tip
Awesome.
of the day
Thanks.
right there. All right. Thanks. Thanks, Créde. Good seeing you again. Have a great week. Look forward to talking to you again. Folks, coming up next, we have Alex Cole, Go No Go Charts, Tom Schneider, Traders Workshop. See you guys after the break.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Well, good morning. Welcome back to NinjaTrader Live. I'll be your host, Tom Schneider, CMT with NinjaTrader. This is Traders Workshop, where we like to bring in our NinjaTrader ecosystem partners so they can share their expertise with you, hopefully the NinjaTrader client. Today is no different. We will be joined right now by Alex Cole from Go No Go Charts. How you doing, Alex?
I'm doing well, thanks, Tom. Good to be back. How are you?
Yeah, great. Good to see you. I'm doing well, thanks. You're doing okay?
Yeah, doing very well. Summer's sort of approaching its end. We got a cooler day here, which is nice. A little bit chilly. So
Yeah. Now, were you affected by the floods at all, or did you
no,
manage to avoid those?
We got a few patches of heavy rain, but nothing really.
That's good. That's good. Yeah, so it's been a little bit, we were doing some kind of mid-year reviews. This is live as it happens, by the way. So we'll be looking at current charts today. We'll revisit the stock index futures, starting with the E-mini in just a moment. But I think it's important to look at those markets, because since you were on looking at the major stock index futures, there was some activity that would have been interesting to see through your lens, through your indicators. But for those who might be seeing you for the first time, Alex, can you just explain kind of the idea behind Go No Go Charts?
Yeah, and as you said, it's been quite an amazing month or so, really. So yeah, the sort of the genesis of the idea was, if you've heard me say this before, I apologize if it's repetitive, but we complicate our analysis. Just generally, I think human beings do that. And what we do is we get excited about something, and that something for me was technical analysis. We learn as much as we can, and we want to get all of that information and all of that value on a chart. So we end up adding indicator after indicator. We add panel after panel, and we end up with a lot of really useful information, but a chart that becomes very difficult to read. So the whole point of Go No Go was to, in the background, put all of that information that I found most useful working with clients, mostly in the institutional space. Tom, you and I worked together a long time ago, but put all that information into the chart, but just display it by painting the bars and coloring the trend as price moves through trends. Try to color those trends so that you get the information from all of those indicators, but you still can see price. So you can still see important levels of support and resistance. You can still look at the chart for new highs and still do all of your traditional analysis. And then, of course, that concept bled into all of the aspects of technical analysis that I thought were most important to give a complete picture of any asset over any time frame. So we do a similar thing with momentum. We include volume, we include volatility, and we put it into a chart that has just the one price panel and just the one sub panel. And so hopefully that allows you to get an understanding of what's happening from a technical perspective, but still keep your chart relatively easy to understand. So that was the whole goal. Hopefully people find that helpful.
Yeah, and you mentioned we worked together before. I remember when you were developing these concepts, because the struggle was real, right? And you dealt with it on a grander scale than maybe most traders, because we were talking to other traders, we were talking to other analysts, we had a big client base and the thread or the theme through all of those, talking to all of those market participants was, what do I use? What's the best study? Here's a list of a bunch of studies. What if I put them all on my screen? And I think, your approach was very, it was like a culmination of a lot of things, right? It was all the inputs, but also the idea of data visualization, solving this issue, right? Being a little more efficient with your data.
Yeah, and I think to your point, we dealt with different people from different areas of the industry. So that was also key for me. Lots of people, like you said, the common theme was, overcomplication, not knowing what to use, not know how many things to put on the chart, not knowing which one to pay most attention to, which one's more important. What if 3 of them tell you something, but 3 of them tell you something else? But that was a common theme across different player types within the industry. And that's what we found. Like I could be talking to somebody who's a futures trader in the morning, and then maybe a mutual fund guy in the afternoon, and then an FX rates guy the next day, and they're using different time frames, they're using different asset classes, but the theme of the problem was the same. And also not just asset classes, but sell side research guys trying to explain to the buy side with a really super complicated chart. They had a good process. They would know, okay, here's where I'm getting bullish. But you try to explain that to somebody on the buy side, and there's 13 indicators on there, and you're like pointing somewhere at the chart. So that theme was there across asset classes, across different roles in the industry. And I think to your point, then, if you can use the power of data visualization to understand what you're looking at, it really sort of, they say, democratizes the information. And I think that's an important piece of it as well.
So maybe we can switch over and look at the chart. We mentioned stock index futures. I have right here, and hopefully you can see my crosshairs. If not, I apologize. But this is the E-mini on a daily basis. We could step back. This is the great thing about these indicators, is we could step back and look at a weekly chart as well and get a broader view. And that's the way I like to look at analysis. If I'm coming fresh to a market, I want to look at a long-term view to see what the long-term picture is, and just focus by changing that time frame. So let's start at a weekly here, and can you explain just kind of where we are now versus what's happened in the last couple of years?
Yeah, well, what you can see from the colors is we have 5 colors. We have a weak and a strong form of the go trend, which is our bullish trend. The weak form being that aqua color. You can see that typically when price pulls back, the weakness is reflected with aqua bars. And then the strong blue bars are when, okay, full steam ahead, we're in a strong go trend. And then on the other side, we've got no go trends, purple and pink. So again, same idea, weak form and strong form. And then the amber bars that you see there are our go fish bars. And that tells us that the market has some uncertainty in terms of where the market's headed. We often see those in choppy periods. We often see those in transitionary periods. And go, no go, and go fish. Interestingly or not interestingly, but I think it's kind of amusing. The go, no go is a NASA kind of military sort of speak. Are we a go for launch? If you're trying to put billions of dollars of investment up into space, you need to know that the conditions are right. And that's the same with our investments in the financial markets. We want to know that the weight of the evidence tells us that the trend is a go or the trend is a no-go, meaning trend in the other direction. And then the go fish, of course, Jesse Livermore was famous for having said, there's a time to go long, a time to go short, and a time to go fishing. So when the market doesn't really give you enough in either direction to be able to identify a trend, we paint those bars amber and call it go fish. So real quick, what you see here is for the last couple of years, we've been in a go trend. So the equity markets have been in a go trend. And, the major pullbacks that you saw there, August, September, October, November of last year, are still go trend. They're just weaker bars on the weekly chart. Now, that might look different on a daily, as we'll see in a minute, but the trend continues. We see higher highs and higher lows. Traditional technical analysis, a series of higher highs and higher lows as we come into to this year. And we were really talking about this last couple of weeks, Tom. What was going to happen here on the weekly chart? Was it going to hold the trend, or was it going to be a trend change? And you saw the weakness after the high with the aqua bars, but you see how the trend remained painting go colors. And now, of course, we had a really strong week last week, and now we're back into stronger go colors this week. Just to sort of highlight some of the other things that are on the chart, the oscillator panel. One of the ways that I really wanted to use momentum was not just in periods of overbought and oversold and looking for mean reversion type ideas, but as well as I do that books have been written and research has been done about using momentum in trend, right? So when we're in a trend and the market's going up, momentum will range from, say, overbought to neutral, but it becomes difficult to know where that range is. Where does it stop? What's the range for different securities? So we wanted to do the oscillator for the go-no-go oscillator to give us an objective level of support. And that's a long way of saying that when our oscillator hits the zero line in a go trend, we want to see if it holds that level of support. So we were looking at that closely the last couple of weeks. It has held that level. And we see then that green circle, which tells us likely trend continuation. So looking good on the weekly chart. So if you keep, like you said, multi-time frame, so valuable, you might be using this as your larger time frame bias and stepping down to the daily chart to see what the trends are saying there. So that's sort of an overview of what we're looking at on the weekly. And hopefully that's clear enough.
And Alex, just, to kind of reinforce what you explained earlier about why you created these indicators are a blend of multiple
right
traditional indicators that have been with certain settings, certain look backs. It's not just one indicator, it's an amalgam of indicators. So it's that concept of, instead of having 6 panels below with stochastics and RSI and MACD and different oscillators you might have, it blends it together. Same thing on the top, right? Which is where you get that idea of we're in a trend, we're not in a trend, with those go, no go coloring and indicators.
Yeah, that's exactly right. And that's a great point to bring up. It's not something new necessarily. It's taking that weight of the evidence approach of blending some of the most commonly used, sort of most accepted concepts in technical analysis. But like you said, maybe before you'd be saying, okay, where did price cross the moving average? Where did MACD cross its signal? And trying to sort of find all of those things, working your way through that process. Somewhere there on the chart, then you'd start to say, okay, well, all of these things are starting to line up. But at that point, price becomes hard to see. So, you can see here that those sort of larger corrections on the weekly chart that stayed in trend, you can see them reflected here by the price rolling through all of the trend colors. So if your larger time frame bias was that the weekly chart is a go, then you probably would be looking for opportunities to participate in up moves on the daily chart. So we would have a lot of clients that are using the no-go moves as sort of protection against risk. If nothing else, like I remember working with somebody and saying, look, if it says no go, then I'm just protecting myself from downside risk. And you can see that here. We're waiting now. If we're long-term go biased from the weekly chart, we're waiting for that go trend to come back on the daily. But the drawdown we would have avoided by being out of the most recent or that one or the most recent no-go move, we would have avoided a significant drawdown and sort of that exposure to that risk by knowing that on the daily chart, the conditions aren't right anymore. So right now, you'd be looking for those opportunities perhaps to get back in.
Right. And we're seeing that it's gone from that no-go to slightly no-go to go fish.
Yeah.
And, we're still on the oscillator. We're still not quite there yet. We're about halfway up to the most overbought.
That's a really good sign. The fact that like we said, when the no-go trend is in place, that oscillator then should be below zero, finding resistance at zero. So the fact that we've broken through into positive territory, momentum is a leading indicator. So that gives us, again, like with any technical analysis, you could be as aggressive or as not aggressive as you'd like. So
right.
if your weekly bias is that we're in a go trend, you could be looking at any number of these reasons to perhaps become bullish. But what you want to do is just have that peace of mind and not be sort of wading your way through all of the different things.
So let's take a look at the NASDAQ, because the NASDAQ hasn't had quite the recovery that the E-mini has had. So it might show a little bit, a different view. Let's go back to the weekly, I think.
Yeah.
Probably a smart thing to do, right? It's going to take a moment to populate. There we go.
Yeah. So like if you're looking at the weekly here on the NASDAQ, that's a really strong looking trend, and you've got to keep everything in perspective. There's a significant move over the last several weeks, but you can see that we didn't make a new lower low, right?
Mm-hmm.
We still made a higher low. Traditional technical analysis, we're higher highs, higher lows, and you can see again. That's another thing, Tom, to point out. I've seen this on a couple of these charts already. That candle that you're highlighting right there, we know what that is, right? You can see because there's nothing else on the price chart. You can look at candle patterns. You can see short-term patterns, like is that hammering out the bottom of that correction? Certainly might look like it. So we've got to keep a lot of things in perspective, but by not overwhelming the chart with too much clutter, we can see things, and you can see how cleanly that sort of held the support from those prior lows, and now we're back higher. So go trend in place on the weekly basis, but a little different, Tom. If you look at that lower panel, we're still riding the zero line there. So we'd love to see that find that support and momentum get back in the direction of the trend.
So if we see this pop up to 1, then we'd get a green dot, right? Because it came off of that zero mid level on the oscillator in the direction of the current go trend. If this were in a no-go trend, we wouldn't see that dot there. But because we're in a go trend, if the momentum goes into that direction, we would see that green dot, correct?
Yeah, absolutely. And because what we can say there, without really having to guess, what we can say is that momentum is resurgent in the direction of the underlying trend. So
Yes.
If momentum bounces off that zero line, it's back into positive territory. The trend is a go. So we can say we're seeing signs of likely trend continuation, because momentum is once again moving in the direction of the trend, which in this case is a go. So you would see a green circle, and you can see those green circles have been popping up on the chart throughout the trend. And then, we like to talk about them as sort of relatively low risk opportunities to enter a trend, because you could sort of say, well, the trend is in place, and now we're seeing momentum coming back in that direction. So when you see those green circles, those are generally trend continuation moments.
But to be, give the other side of that trade, or give the other side of that situation, I go back to October of last year. And this is a weekly chart, and we did have a situation. We were in a go trend, and we did have no momentum according to this oscillator, right? Zero line, and it did trend down. So that's a possibility as well. It didn't get it out of the go trend, but just because we see this go trend on in a darker blue does not mean that this momentum will turn up. Anything can happen.
Absolutely. I mean, that's such a great point. Of course, anything can happen. But Tom, I think you'll agree as a technician, what I like about technical analysis, just in general, is that it tells you when what you might expect is going to happen hasn't happened. I think that's maybe even more powerful than anything else. So like if you're watching this and saying, okay, we were expecting trend continuation, but then if it breaks down into negative territory, then you're saying, okay, well, we're not seeing that just yet. And if you go back to that point you were mentioning, right there, you might say, listen, for me, depending on my risk parameters and how aggressive or conservative I want to be, breaking out of that squeeze into negative territory might be enough to lighten a position or exit a trade. But the trend remained the go colors, right? We didn't break trend. So weight of the evidence says we're still in a go trend. But for me, depending on who I am, that might have been enough to lighten positions or to exit a trade. But as soon as we then get back above zero, now we can, okay, we thought maybe this was the end of the trend, but the technical analysis is now telling us that the trend is still in place and momentum is back, and we're getting that trend continuation icon. So even if we, let's say, lessened positions or exited trade, once that crosses back above zero, now it's told us that it didn't do perhaps what we were worried about, and we move in, in the other direction.
Right, and it gives us new evidence, right? We're looking for new reasons or new probabilities to help us with our directions. Let's take a look at the daily. Let's go in, because we know Jim and I were Jim's chart. He was doing some retracement analysis, and NASDAQ just hasn't gotten back to the same retracement level as, let's say, the E-mini.
Yeah.
I think this might be 62.5% retrace instead of 75%. And I could certainly use a Fibonacci retracement right here, right? I don't think my colors are set up right. Well, actually, you can see it, right? So 62.5%. What's interesting is, here we're just coming out of no go, and we're getting those go fish bars. Momentum is increasing. This might be a good opportunity to say, you know what, with the proper stops, I'm going to go long.
Yeah, and to just, a couple of things. One, yes, because the price check panel is fairly large and hopefully unobscured, you can do traditional technical analysis, Fibonacci retracements, trend lines, all of that on the chart. But also, Tom, just because of what we were talking about on the weekly chart, if you go back to like the 15th, you see the 15th there, a couple of weeks ago. Sorry, last month, 15th. Sorry.
Got it.
Right. So here, that's exactly where we were looking at on the weekly chart, right? It's come down to zero. It's testing zero. We don't know what it's going to do. We don't know if it's going to show trend continuation. The oscillator breaks below zero. Well, before the trend changes, that might be your initial, okay, let me lessen my positions or let me exit the trade. If it goes back above zero and the trend continues, you can always get back in. But in this case, then it went to a no-go. And that's what I was talking about before, of that protection against downside risk exposure, because you didn't know, like you said, you don't know what's going to happen. It could go completely the other way from what you're thinking. But technical analysis tells you, it's that evidence, waiting for that new evidence, like you said. Here we were saying, okay, it's a bit of a concern. We've broken through the zero line, but the trend indicator is still showing aqua bars. But then you get a new piece of evidence when we get that no-go bar. And now you really shouldn't be still in that position. Even if it's, here where you're getting out, you still protect against those new lower lows that we see then in as that correction continued. And like you said, now maybe we get back above zero. Maybe that's enough to get you back in if your long-term perspective is a go. Maybe you're more conservative. You want to wait for those amber bars to turn into go colors. Maybe you combine it with your Fibonacci's and say, once we get past that 61.8, then okay, fine, then we'll get back in. But it's that sort of technical analysis tells you with each step along the way. And, in that situation last month, it could have continued as a go trend, but it didn't. And so, we need to be aware of what's happening.
Right. So let's take a look at the Russell, because Russell and Dow have behaved a little bit different. Jim calls this, by the way, the London Bridge formation. I don't know how accurate that is, maybe the Tower Bridge. But kind of an interesting pattern here.
Yeah.
right? I mean, this is really an interesting behavior, because you did have this go, as we would expect in a rally,
Yeah.
right? A strong rally like this, you have go bars, and I'm doing the daily. I'm not going to go to the weekly just because of time considerations. Um, we have a bit of a pullback. Okay, I can see the switching to go fish, um, and then no go, right? But
Yeah.
we're kind of toying with go fish, and now we're in a go trend, but a little bit of capitulation. This is due to the volatility, right? I mean, this is just
Yeah, I mean, I think that this is one of those charts where it's ugly, right? It's not making up its mind. The trend is not sustaining. But this is when you want to certainly combine technical indicator use with traditional technical analysis. I mean, if you look at when we entered that no-go, look at the congestion from the left side of the chart, right? So there's going to be a lot of support around this level, and you can see that because, again, there's nothing else on the chart. So that's one. And then also right now where we rallied the last 3 days, but we've come right up against sort of the lows from that last bit of the go trend. So you can throw those traditional technical analysis ideas onto the chart when the price is perhaps too choppy for typical traditional indicator analysis. And so you're sort of waiting for, exactly there. There's some possible resistance in those levels. And you can say, well, look, if we get through that level and then the go trend returns, now we're putting the weight of the evidence back on our side. And perhaps at that point, the oscillator will be back into positive territory, having broken out of the squeeze. And so you certainly want to keep perspective and be aware. I mean, even here, if we go into a go trend, I know there's probably a high resistance there that we'd need to just look out for, and it might line up with a new counter trend correction icon. Generally, we find that any kind of important information on the go no go chart, color change, icons, they line up with important price levels, price being still, of course, so important.
Yeah, and one thing to note, I think you're not always going to get these indications, right? This is the triangles are coming out of extreme overbought, oversold. The dots are coming out of neutral, right, in the same direction. So we're in a go fish bar here. If momentum ticked up and we didn't get a go fish bar or a go bar here, we might not get that green bar, right? But
Right.
it doesn't mean that go bar isn't valid. It's just not lining up with what the momentum is telling us, and that happens when you have consolidating or choppy markets.
Yeah, I mean, the trend, we believe that, the trend is identifying the trend is possibly the most important skill we can have. So we'll still pay attention to that trend if it turns to a go. But if it turns to a go and then the oscillator moves into positive territory, like you said, that's just a little bit more evidence or a little bit more in your favor.
Two markets real quick. Let's do this in a very quick way. We're running up against time. Here's gold.
Yeah.
We making new highs in a dark blue go trend. You're not, this tells me there's still upside to be had because the momentum isn't completely overbought.
Yeah, higher highs, higher lows, go trend in place, momentum in positive territory, but not overbought. Absolutely.
And then let's take a quick look at crude. Opposite in effect here, downtrend, no go. Interesting here. You've got this momentum finally slipping under zero in a no go trend. This to me, trades a little different, trades more fundamentally, I think, than technically sometimes.
Yeah.
So, but the technical should reflect what's happening in trading, right? So, this to me almost has a little more potential downside than gold does have upside.
Yeah, especially we're seeing it approaching those prior lows, momentum negative in the direction of the trend. We'd be looking to see if price could make a new low here.
Take out this low right here from the 5th.
Yeah.
Yeah. Okay, great. Alex, it always goes by way too fast. Where can people find you and continue the conversation?
Website, www.gonogocharts.com, or shoot us an email, info@gonogocharts.com. Thanks, Tom.
Oh, my pleasure. Always great to work with you, Alex, and hope you have a great rest of the summer. All right. We'll be taking a quick break, but we'll be right back with Midday Wrap Up with Mike Burke.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
By a million.
Well, we are back. This is Midday Wrap Up. I'm Michael Burke with NinjaTrader, joined by Tom Snyder. CMT. Tom, how are you?
I am doing great, Mike. How are you?
I'm doing great. Markets
Awesome.
are taking a bit of a breath today after yesterday. Anything stand out to you?
No, I mean, you're right. Well, Russell is down 1 1/4. It's down the most of the stock index futures. It never really got any lift after let's say I don't know, 5 in the morning, 4 in the morning. It just, London just knocked it down, and it kept selling off. E-mini, did get a little bit of a lift, as you can saw at the what is that, the 8:30, 9:30 at the opening range. Market knocked it up. We were talking about 3 on a 10-minute chart. We saw 3 white soldiers turned around, turned into, I don't know, ugly black crows, and continued down. So just, here's the Russell, and never got that lift that the E-mini or the NASDAQ got.
No, I mean, we closed right near the high yesterday. And, you know, basically that's kind of where we traded, but US traders just took it down, and it continues to take it down. We're at the low of yesterday. That's pretty interesting. That's held as awesome support, you know, after we came out of that opening range, went right down there, but can't break through it. I think that's bullish heading into maybe tomorrow. I'm not sure that, you know, you look at order flow cumulative delta, that's also picking up here. So maybe there's a turnaround in our future here.
Yeah, this just seems like a level that people are coming in to buy, right? This might 2150, 2145, 2150 buyers are just coming in, that cumulative delta, even a little lower, right? 2155 and lower. People are just buying this market. So, you know, I think you're right. I think this level is going to hold, and we might see a turnaround.
Let's look at the daily here real quick, just to kind of put that in perspective. So, you know, on my daily, I'm using a little bit different Ichimoku cloud, kind of an equal and opposite from yesterday and today so far. But this is actually an engulfing pattern. So we're going to end up with a bearish engulfing pattern today. It's right at the bottom of the cloud. It's right at that 21 SMA.
Yeah, and you know, I don't know if that's bearish in general, right? And it's coming at the top of a nice uptrend. So is it a pause or is it a reversal? Well, you know, remains to be seen. What I do see though is I see your Keltner channels kind of tightening up, which usually indicates consolidation.
Yeah, I mean, this market, you know, is about 60%, 60, you know, maybe 2/3 of its normal average true range today. But everybody else is 1/3 of what its normal true range would be on a Tuesday, which is typically a pretty good trend day. That's kind of odd. I'm not sure again, is this a vacation factor? Is this, you know, traders are just, you know, not sure what to do? I'm not sure what to read into that.
I think the vacation factor has a little bit to do with it. And plus there's not a lot going on. I think we're waiting for Thursday. We're waiting for Jackson Hole. We're waiting for Powell to speak on Friday. And you know what's to be gained, I guess, to think that there's going to be a big move before all that. I don't know.
Yeah. Yeah. At lunch yesterday, I was sitting on my couch watching CNBC. They were talking about the fact that about 40% of the small caps in the US are not profitable. I thought that was a big number.
Wow.
So I'm not sure. Maybe that is something that's kind of been, you know, hidden under the scenes a little bit, and maybe that's why we've seen the Russell underperform. But that seemed like a big number to me.
Yeah, that just might be the nature of small caps.
Could be. Good point. Let's look at the ES on the daily real quick, and then we'll look at the intraday. Here we go. So interesting, you know, the price yesterday kind of peeked through that Ichimoku cloud, and today we're looking at right now we have a key reversal. If we were to end up below yesterday's close, that high is a significant high, even though it's a small bodied candle, small range candle. That doesn't take away from the fact that, you know, that is a higher high and a lower close, and we could see some follow through the downside tomorrow.
Yeah, I think with key reversals, I think the next thing to look at is the piercing line. Like, how far does it reverse? And you know, you got your bearish engulfing, which of course is self-descriptive. I'd want to see a little bit more of a close down below that piercing line. You also have a higher high and a higher low. So it's one of these interesting things that, you know, there are conflicting inputs, and the key reversal can be the start of a downtrend, right? And that's why it's key. So I get that, but I'm always just looking at a trend as well, and it's higher high, higher low, and what's out of sorts? It's the close is kind of the out of sorts. What's going to take precedence? I don't know. But, you know, I do see a shorter term moving average crossing above a longer one. You're right at the top of that Ichimoku cloud. you know, there are some bullish forces here and there are some bearish forces here.
Oh, I completely agree. I mean, it's hard to pick a top when you've had 8, positive days in a row. And sometimes these key reversals, kind of point that out to you. But I
Yeah.
agree with you. I mean, the other thing is that yesterday we closed above 5,600,
Yeah.
right? So in order to see some follow through tomorrow, we'd really have to see it get back under 5,600. I think if there's going to be a significant turnaround here. There is one other piece of evidence here, and that is that right now, in the morning anyway, we have a green VIX candle. And we're back above 15, back into neutral. So that
Yeah.
could be kind of a little piece of the puzzle that maybe there's a little bit of a bearish bias here, but we won't know until the end of the day today. So we'll take a look at that and see what happens.
One other thing, Mike, is your volume. Jim and I hinted at this today. The volume is low, right? And this, and I would say almost the entire uptrend has been under average volume, right? So this rally has been, trading under the, average volume, which can indicate that it's not a serious rally, but it is rallying, right? It's 75 or more percent retraced. Certainly if you bought it towards the low at that big green candle and you're still in a position, like it's legit, but just is the low volume, is the volume being under the average a factor of two things: one, big volume when the VIX spiked; two, vacation. There are all sorts of things going on, so maybe we don't really even consider volume as being indicative here just because of those two things.
Yeah, I agree with you. Let's look at NASDAQ. This is down 60 points. We're coming off the lows a little bit here. But same kind of thing, key reversal. Looks like, again, we're right at the bottom of that cloud here. In this case, we're at the bottom of the cloud. So that's going to act as a little bit of resistance. But yeah, we're at 19,800. That's a key level as well. So I don't know, maybe this market is giving us a little more of a hint that maybe that's the end of this move for now, and we'll get a little bit of a retracement. The question is this a pullback in the bigger downtrend, or is this going to be a pullback in a new uptrend? And I don't think we know that yet.
Yeah, which, kind of makes me think that, this level could be important with your downward forces, your upward forces kind of all coming in at the same time. It's what will win out, and, remains to be seen.
Let's see. Let's jump around a little bit. Bitcoin. Let's go to the 5-minute on Bitcoin. Bitcoin's been all over the place today. We're again a little bit muted, about 80% of its normal average true range. But we had this, we'd been above 60,000, and we were kind of trading at the close of yesterday for most of the Globex, at least in the morning. And then, U.S. traders came in right after the opening range and took it back under 60,000, right back to the previous close. So interesting. We closed near the high yesterday, and now we're seeing that pivot point from yesterday and the previous close acting as support.
Yeah, 59. I mean, we're right there. We're that I think is an important level, reinforced by the pivot. Can we get down to yesterday's low, which is 58,000, right? Yesterday's low was exactly 58,000. So I think this has room to go. The average true range for Bitcoin is about 3445, 30, just say a little north of 3,400. And so that puts us at under 58,000. So this is an average trading day, and we think that this trend is going to continue. If pivot doesn't hold as support, because it's only closed below there once, it's trading below there now. I think yesterday's low is in play for sure.
Yeah, let's take a look at that here. So, we're getting close to another, where are we? There we are. Yeah, so 58,000, yesterday's close, S1, they're all right there. Definitely could see that being another attractor level for this market. But yeah, it's looking weak here.
Mhm.
How about crude oil? There we go. This is the 5-minute chart of crude oil. Again, we were kind of just trading at par for most of the Globex session, at least coming into the US Open, and a little bit of a rally to the pivot point, right there. But again, this market's pretty bearish in my mind. There's, we've seen that turnaround here, and we're back at, we almost tested 73. S1 is at 73 today.
Yeah, I'm feeling bullish on or bearish on crude. VWAP really hasn't held much. I mean, it held during the European session, but as support. And then when finally got pushed below, now it's acting as resistance. That might be interesting. I think you're right. I think this is looking to be bearish. Peak highs were somewhat increasing up until that 10 o'clock hour. And then now we've got a recent peak high that's lower than the previous. This might have switched into a sell-off for the, into the end of the day.
Let's look at the daily really quick here. So yeah, I mean, we've been down, we've been down 5 out of the last 6 sessions. And really that green candle, I consider that a down bar too. Lower low, lower high.
Yeah.
Just the fact that it closed up there, and then continued, you're really going to kind of think of that as a red candle as well. Yeah, I mean, today we almost wicked down to 72, but again, buyers brought it back. We're at that level, I think, where you can see hedgers coming in at anywhere between 72 and 73, and maybe that's maybe that can hold here. But it's also looking like a a double bottom, maybe a triple bottom if you go all the way back to June.
Yeah, I mean, I marked out just shy of 72 is the low that we saw at the beginning of the month, right? 71.67. You have to go back to February to see we found support there. We have to take it back. Yeah. So I think I'm using unadjusted, right? Yeah, there's that double bottom, and really it got lower than that before, but I could see this. I could see this trying to get below even not just 72, but try to get to 71.50.
Yeah, I mean, we get there'll be an inventory number tomorrow. Is that right?
There will be one tonight from the API, and then one the EIA number is tomorrow morning at 10:30. Yeah.
Yeah, I mean, so we added to inventory last time. They're expecting a small draw. I don't think that'll have much of an effect here, but there's plenty of crude oil, plenty of production in the US. So
my guess, Mike, is if they're expecting a little bit of a draw and they actually put some crude in, then we might see 72.
Agreed. I think that could definitely be a catalyst for that. Let's see. NASDAQ pulled back a little bit. Let's look at that on the daily first. Charts tracking a little bit slowly. There we go. So this is daily. Nat gas kind of consolidating here for the last couple of weeks. We tried to get to 2.3, couldn't really get there. Now we've got that 126 SMA kind of acting as resistance. The 50 is right above that. The cloud's right above that. Not a lot of room to the upside here without hitting something.
Yeah, and I think you and I might have the same moving average. The 200 is that maroon line, I think.
Let me see. I may have changed that.
Is that the
you're
two?
right. I changed that. Normally that's my 126.
So that, the 200 we've talked about as being can be very supportive or resistance heavy. For the energies, though, it hasn't been. It seems the market has traded around it, Although you could argue last week we tested it, we failed. Now we're our high today got closer, but it's failed. We might see that 200 holds and we see a resumption to the downtrend, which we can imagine, right? Because we're coming off the June 11th lows or highs to the lows in August 5th. We've got a little bit of a rally, which might be about a 25% rally and then turn around. So I could see this, your resistance areas holding.
Yeah, I agree here. And again, this is a market, that's, the volume has been pretty much on average here. So I think we've probably found some price happiness here at 2.2. But yeah, I mean, we have to look for a breakout. And if you consider this a volatility squeeze, and I had to pick which way I thought it was going to go, yeah, I'd have to say to the downside, simply on fundamentals and what we're seeing here.
Yeah, I agree.
How about metals? Silver trying to test 30 again. Let me click on that again.
Boy, it got there today.
Yeah, we kind of whipped right up there. Sellers were waiting for it, in ambush, and brought it back down to that 50-day moving average, which we tested on the low side. And now this is kind of a really weird, quiet bar here in silver, although that's near the normal average true range. So this market, the volatility on this market's kind of quieted down, or maybe not quieted down, but it's normally kind of quiet. And we see these smaller bars.
Now, where it's trading right now, Mike, 29.5. That's the bottom of my Ichimoku cloud.
Got it.
So I've got a little bit of lower. I've got different settings. And that bottom of the Ichimoku cloud is a green cloud where the bottom's about to increase up to 30.50 when it finally turns over to a red cloud. So kind of where your inflection point is, where it turns down, that's where mine turns into 30.50. But it looks like we might get a little bit more of a rally, and then we could see some resistance up at 30.50.
It's interesting. I use different inputs for my Ichimoku cloud, but you could consider that if you based on what the normal inputs are, what I look at, you could even come up with a third, faster set of Ichimoku clouds. It's another concept around multi-time frame analysis. Normally you think of multi-time frame analysis as changing, looking at different chart time periods, 5 minute, 10 minute, 15 minute, daily, weekly. But you can do the same thing with indicators. And we do that with moving averages.
Right.
So we take it for granted that we're using different length moving averages, but a lot of people don't make that leap to where you can use different lengths for really any indicator and get a multi-time frame kind of perspective. It's something that we don't talk about a lot, but this kind of hits us in the face that I'm using different inputs for Ichimoku.
Right. And you're looking, those indicators will most likely look different, but sometimes they will have some coincidence where the level on my Ichimoku cloud with different settings is roughly the same as yours, which could be roughly the same as another's, which indicates that maybe there's more to this area than normal.
Correct. And you're at the bottom of the cloud. My cloud's a little bit higher. Like you said, maybe that's an area of interest as well between those two different time frames.
Oh, sure.
And are they both green? Are they both red? That kind of thing. Are they trending up? Are they trending down? I think you can get a slightly different perspective instead of just one set of inputs. I think that can be valuable.
Sure.
Let's look at gold. 25.50 seems to be the level here, Tom.
Yeah. It's a nice level. New high today.
There we go. I'll zoom in a little bit here.
And if we were to close right here, we'd have a new high close, right? All-time high close.
I believe that is absolutely correct. Yeah, so right now that's an all-time high, daily high, right?
Yeah.
I kind of stepped in it a little bit yesterday, talking about weekly charts, because there could be a weekly high, there could be a daily high.
Right.
So that kind of, obviously there could be a monthly high, which could all be different, but the daily high is typically the highest high of all of those.
Right.
All
right.
of those other ones, you could have a high, but there could be a higher day or a lower day. So
Yeah.
really the daily is where the action is when you're talking about the highest highs or all-time highs.
Yeah, for sure. And 2570 is that new level, right? It's now a, well, I hate to say it, gold standard, but it's a gold standard for this market.
It's a little heavy-handed there, but
It's-
yes.
It popped in my head and I couldn't avoid it. It's the new target, right? We've made a high there where we saw a little bit of a pullback, but now that's the standard that this market, the bulls want to shoot for. We hear about 3,000 on gold by the end of the year. This could be hopeful for that.
Yeah, I mean, you just can't argue with highest all-time highs.
Right.
No reason to try to pick a top here.
Yeah, good point.
Let's see. So the yen is rallying a little bit. Again, the dollar's weaker today. The 10-year yield is down, hurting the dollar. And the yen is taking advantage of that. So, we had that equal and opposite a couple of days ago, back above, that 68 level. And, we're testing 69.
And it looks like almost 3 white soldiers, which I like, off the bottom of a downtrend, to have those 3 bullish candles. Now, I don't know if technically they are, because yesterday's high is higher than today's high. So usually you don't see that in an uptrend that's very strong. You can see it in an uptrend as we're looking now, but the point of the 3 white soldiers is very strong advance, right? Very strong up move. And
Yeah, I mean, the big seller's wick there on that middle candle kind
yeah,
of
that
takes away from that concept.
yeah, so that's a weird thing, right? From a pattern point of view, as identified by candlestick patterns, technically it might not be a 3 white soldier, but it's still pretty bullish, right? You've got 3 green body candles, which are about the same, and kind of turning around that trend. So whether it's 3 white soldiers or not, it's still short-term bullish off of some moving averages.
Yeah, so I always talk about the fact that I use 21 SMA as the pullback in an uptrend or a downtrend, and that's what we saw here. We had a little bit, not a strong pullback. It took a while, a little
Right.
bit of consolidation there last week, but it is a pullback. It didn't quite get to the 21A, which makes it a little stronger than if it actually went through that 21 SMA. So anticipation, buyers are anticipating off of that level. That was a key reversal 2 days ago as well, last week, right? That was a strong one based on your criteria of crossing that piercing line. That was a pretty good key reversal. That was a pretty good signal for this market.
Yeah, nice follow through, right?
Yeah. So I mean, the dollar's weaker, the yen is taking advantage of it. Maybe we can get up to 70.
Ooh, yeah.
What else should we look at? I guess we'll look at the 30-year. This is up 0.5%. This is what's driving the weaker dollar for the most part, right? Is that 30-year has been pretty strong the last couple of days. We're still not back up to that 126 where we wicked way up there, almost wicked up to 127 a couple weeks ago. We're still not up there, but again, this is still an uptrend. If you go all the way back to, July, we had a bit of a pullback, and although we haven't made new highs yet in that pullback, I think we're destined to do that.
Yeah, and it's in an uptrend. When we see the stock market is kind of going sideways, maybe anticipatory Today, stock market's been in an uptrend too, but today is a little anticipatory. Bonds are not. And, maybe it's just this market knows something about what's going to happen end of the week, what Powell's going to say, or just what's going to happen in September with rates. Maybe that's enough to know. And it's not going to be a huge advance towards that target wick, but it's going to be a slow and steady. That's fine. 126 is certainly a target I would look at.
You and I were chatting real quickly before we started that there's going to be a revision in the number of job growth for March to March. Do you think that is another factor that fuels the idea that we're going to get at least one rate cut in September?
Oh, I think so. What'll be interesting is if the probabilities go to 2 or 50 basis points. And the reason is if the revision happens, if it's, this is all kind of speculation. I don't know how, it's coming from an institution, which gives it a little more credibility, right? So if it's true, it's the number is pretty large. If it's the max, what they're saying, right? 1 million jobs reduced lower, which would be a weakening economy. So if we're at 25 beeps now without that revision, does it go to 50 with the revision? Or is it just, okay, we're definitely going to cut in September. It'll be 25 basis points, no bones about it. And either way, I think the market rallies a little bit on that news.
Yeah, I think you're right. I mean, we didn't see much of an uptick in the Fed funds tool on CME today. Maybe people are waiting to see what actually happens tomorrow and what happens out of Jackson Hole.
Yeah, I think the room, if the max is true, that's, I think, a pretty big thing. But what if it's only 10% of what they're thinking? Then it's kind of a nothing burger, right? I think the market has to anticipate a little bit, because you'd be foolish to go long bonds, in a big way, and that number of maybe the revisions don't happen at all, and where are you? So I think you're right. I think they're going to wait till tomorrow.
Well, we'll see that. I don't know what time that comes out. It's not on my calendar, but we'll keep an eye on that for everybody, and we'll let you know when we know that number. Tom, we ran over a little bit here. Thanks for being with me.
Oh, my pleasure. Always great to talk with you, Mike.
Who's going to be on Bars Closing today?
Jim has drawn the lucky straw. He will be closing out Bars Closing, but we'll be around in the background, I think.
All right, perfect. All right, thanks everybody for joining us. Have a great afternoon. Good luck in your trading. We'll see you at Bars Closing.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.